Good morning. Good morning, everybody. Welcome to 2024. How's everyone doing this morning? Josh, did you see that? I'm not sure if you're listening. John Novak gave me a little help on the sidelines there. Ron, nice to see you, bud. Sydney, hello. Miss Debbie, nice to see you. Awesome. Did it work out for you, Josh? Joel, go through the little rebuild, man. You'll be okay for class. It'll just take a minute. Wow, welcome. I'm excited. Here we go, 2024, guys. It's going to be a good one. We're going to have a lot of fun this year. We're going to do what we did last year, to be honest with you. We're going to learn patterns. We're going to recognize things that bring us advantages and turn them into trades. And that's really going to be it. And I'm going to do the same routines. I'm going to go through. If it's not broke, don't fix it, right? Everybody wants to reinvent. Hey. Absolutely, Farok. Nice to see you. Awesome, Josh. Cool. That's okay if you're not going to be able to attend all morning. So, Farok, I hope I'm saying it right. Guys, let's go through what we're going to do today and how we do it. So the first hour every day is rules. The first hour is rules. Okay, perfect. Thank you for that. I have been known to butcher some names every now and then, and I never mean to. It's never intentional. So we're going to do the same thing in the first hour that we do every hour. We're going to talk very much about a high probability trend trade. We're going to go over the rules for the trade. We're going to look at it visually. And then also for you guys that can't make the whole class, I always want to make sure that you know that this is an option. From the YouTube page, there are videos, and I mean, it goes on forever, of this classroom. The first hour is always rules. The first hour is always dedicated to giving you that great foundation. And then the second and third hours are when hey, good morning, Happy New Year. Second and third hours are where we start looking at your charts. We start looking at your pictures. It goes from the lecture approach to more of a discussion. And guys, I always want to encourage you, if you have a picture that you need to share or something that needs to be covered before you have to leave, just let me know. Just type it in the room. Go, hey, Mark, I'm out of here in an hour. Can you take a look at this chart? And I'll make sure that you get the feedback that you need. Just because you have a time constraint, I want to make sure that you still get everything that you're looking to get from the Nexgen education. So, Farok, just feel free to ask away, but we're going to go through the first hour. We're going to make sure that everyone's solid with rules and what we're looking for. But before we do that, the biggest part of my routine every day is my charts are loading, and I'm sipping that first cup of coffee, and I'm looking over yesterday's trades. I go to forexfactory.com and I make sure that there's not any news releases coming out. I make sure that there's nothing going on that could really make the market be a little erratic or just an emotional response from the people that move the market. Today is Tuesday, January 2nd at 9:45. We have what's considered low impact news. Final manufacturing at 10 a.m. More low impact. Not typically market movers. There's always the potential, especially if it's something like crude oil inventories. But what I'm really looking for is I'm looking for these orange boxes, these medium impacts, and these red boxes, these high impacts, because these are the ones that can make that market bounce 100 points one direction or the other and really go flying. And if you get caught on the wrong side of it, it creates some challenges, without a doubt. So every morning, that's a big part of what I do. And then I head over to the education page for Nexgen. Good morning, Dwight. Nice to see you. And Happy New Year, everybody. I don't know if I said that or not. Everything that I talk about, guys, comes from this education page. There are no secrets. I say that every day, and I mean it wholeheartedly. We're going to give you everything you need to be successful. We're going to give you everything that you could possibly need to be successful. The only thing that Nexgen can't provide you guys is experience. The only thing that I can't give you is repetition. So that's going to be your part. If you are a Ninja newbie, you're brand new to NinjaTrader, guys, there is the software user guide. This is really pretty much everything you need for NinjaTrader, all the how-tos, stuff like that. I always encourage you to ask in class if you have a Ninja problem. Same way Josh just did. Josh was like, dude, my bars are on the wrong side of my fibs. How do I fix it? I didn't have the answer. I'm not a tech guy, but I've got my big brother who wrote the software on Skype, and he was able to help us out. So even if I can't give you the answer, if it's a tech answer, I'll find the person that does it. I do. That's how you get to where you want to be, right? But screen capture programs, guys. One of the most important things about what we do is taking pictures and sharing them in the room. So if you need help with your capture software, if you just need a little guidance getting you to where you can post in the room, guys, let me know. I firmly believe there's nothing more important than being able to post in the room and get that feedback. I'm here for 15 hours every week. I'm live, and my goal in life is to get you where you want to be. But if you have a question, I don't know it. I can't see your face from where I'm sitting. So make sure that you drop it in the room. And talking to me in pictures is always the best way. And then in the tutorial section, guys, this is where everything that I talk about comes from. There really aren't the secrets. We're going to talk about, for the first hour, what we call a high probability trade. And I like to drop these in the room. I don't know why, because I'm just going to read it anyway. But a high probability trade is defined as when each indicator on every chart agrees for the trade, guys. This is when your triggers are the strongest, when there's nothing in the way between you and your target. No termination conditions exist. Guys, this is the best of the best, but this isn't all that there is to Nexgen. This is your foundation. This is teaching you to read your charts. When you go through the process of understanding the high probability trend trade, what it does is it allows you to look at your chart and recognize three very key concepts that are going to take you to any level you want to be as a trader. Chart reading is about 90% of your day. 90% of your day is spent looking at the chart, waiting for advantages to come into play. But when you become a chart reader, you're going to understand where the market is likely to continue. And these continuation points are an awesome spot to enter, to get into the market when your rules are met. You're going to ultimately understand where the market is likely to go. And this is going to help you with management, getting the most out of trades, and not holding too terribly long when the market isn't giving you that opportunity. And then finally, where the market is likely to stop. And guys, these are what we call termination conditions. Termination conditions can end a trend. Termination conditions can make that next trade not work. Termination conditions can reverse the market. And these termination conditions, guys, they're essentially where decisions are being made by the people that are in control. You are going to have the advantage of knowing exactly where those are. Good morning. You missed the Forex screen and the colors because you're, oh, no worries. Let's get you squared away. And let me give you the link as well. Let me finish this little thought. I'm like, if I see a squirrel, it's crazy. The high probability trend trade, Sav, I'm going to go back to it for you, is going to teach you to recognize advantages. It's going to teach you to recognize problems. And this is what's going to become your basis, your foundation, that turns you into a chart reader and prepares you to go on, to find more, to begin to recognize these patterns. And then forexfactory.com. This is just a calendar that I look at every morning, and it tells me when news is happening. My red flag news is going to be these red boxes, the high impact, and these orange boxes, the medium impact. But I'm staying aware when news is being released, because sometimes you get something like crude oil inventories. And there's a lot of crude oil traders in here. And even though in the financial world it's considered kind of small, if you're a crude trader, it becomes big. So maybe the same will be true if you were a natural gas trader. But these red and orange boxes are what I'm looking for. And for me, it's an opportunity to just kind of sidestep the market, to go refill my coffee, to go toast a bagel, to do something other than putting myself in the middle of an emotional response. And then we talked about what we're going to talk about. We're going to talk about the high probability trend trade, guys. It's only 3 rules. The high probability trend trade, and once again, I'm going to say this a lot today, is your foundation trade. This is the trade that teaches you to be a chart reader. This is the trade that teaches you to understand what your indicators are telling you. And it's gonna have you focusing on advantages, things that are going to give you a statistical advantage when you're looking to get in the market. This highest probability trend trade, guys, it's only 3 rules. Each rule gives you an advantage. The first rule will give you the advantage of momentum, a market that is likely to continue in the direction of your trade. The second rule is going to give you a clear path, which means that you're not trading into those termination conditions, those likely to stop areas. And finally, your third rule is just designed to get you into the market when the first two rules are met. And it allows you to pinpoint where the market is most likely to continue. So this trade gets you to where you speak to yourself in terms of advantages when you're reading your chart. And the cool thing is these three rules that we're about to go over happen on only two charts, guys. My mantra, somebody wrote it in the traders chat yesterday or a couple days ago. Simplicity is my battle cry, guys. Keeping it as easy and as focused as you possibly can, rather than trying to complicate it. There's time. There's time for you to find more, but focus on the best of the best first. We're going to use a large chart because a large chart defines what the large crowd wants to have happen, what the people that move the market want to have happen. And on this large chart, this slower moving broad stroke of a brush chart, you're going to use the most current bar. And with this most current bar, you will understand direction, momentum, and areas, guys. And your first two rules, 2 out of 3, 66% of your rules happen on the large chart. And when they're met, you will have the advantage of momentum and you will have the advantage of a clear path. And once those are met, you're going to turn your attention to a smaller, faster chart. And this is a refinement chart. What happens in one bar on the large chart breaks down into about 15 to 30 bars on the smaller, faster chart. And you will literally pinpoint where the market is likely to continue. This is where rule number 3 is used for entry. So only 2 charts, keep it simple. Let it be just 3 rules, guys. We're going to take the first hour to learn how to be chart readers, to learn how to identify advantages. And then, of course, first day of the new year. Good morning, Chef. We are going to talk about your path to becoming a confident trader ASAP. Guys, this path has been consistent for years. And it has been consistently ignored for years, myself included. And I'm just going to tell you, I've taught this class long enough that I could make a list of the pitfalls that most traders run into. And the first one, the biggest one, the most prevalent, is that they don't ask for help. They don't post their trades in the class. There's this idea that because we're so successful in our lives outside of trading that we don't want to make ourselves vulnerable, suggesting that we don't have all the answers. But guys, you're brand new. Allow yourself to be new. Post your trades in class, every trade, win, lose, or draw. If you have a question about what you're reading on your charts, post that chart in the room. Ask that question. But do that, post, take a lot of pictures, annotate a lot of pictures, and then use your spreadsheet, guys. Nexgen gave you a spreadsheet when you downloaded the software. It looks just like this. It's got 3 tabs on it. Your first tab is where you are going to record every trade that you take. This is your trade journal. It lets you identify the advantages present. It even talks about how you felt. And it gives you this giant spot for feedback, guys. When you post a picture in the room, we're going to talk about it. It's like a private session. And put that feedback in your notes section. It becomes very, very important. As you take pictures and you begin to learn these patterns, you begin to recognize these advantages, the second tab is designed to help you create your trading plan. Not Nexgen's trading plan for you, but your trading plan. What's it going to look like to get me in the market? What is that pattern so that it becomes easy in the moment? And then finally, guys, I've done a lot of work over the last year or two to fill out the third tab. And this is about 275, we're probably more than that. We're probably closer to 300 at this point. Pictures of you guys using the software, embracing these advantages, going after these high probability trend trades, and even what we call a medium probability trade where maybe some issues exist, but your chart reading allows you to recognize them, to work around them, to manage through them. And there's about 275. If you're a brand new user, you should take an afternoon and click on all these after you get this basic understanding of the rules, because you're going to start to see these advantages play out. There's ideas for you guys that want to trade the NASDAQ. Just from experience, guys, the NASDAQ moves about 5 or 6 times faster than crude oil, 5 or 6 times faster than the S&P. And if you're not solid on what you're looking for, the NASDAQ is going to eat your lunch, guys. So learn the patterns on an easier market. The patterns are the same. The market doesn't know what you're trading, but the patterns are consistent. They just happen a lot faster in the NASDAQ. But there's some ideas when you get to that point. There's management, patterns that repeat themselves, those termination conditions, those likely to stop spots. All of this is available for you guys. All you have to do is click it and spend a little time going through it. And if you click on a picture and it doesn't make sense to you, take a picture of it, drop it in the room. We'll talk about it. But all that to be said, use your spreadsheet, guys. Use it every day. Fill it out. Take 15, 20 pictures a day. Annotate those pictures. The more pictures you take, the easier it becomes to recognize what you're looking for. I just dropped a version of it right above you in the chat box. You can download it. Can you see that? You can either download it if you want to. You can click on that link and drag it over to your computer, or you can go to your Nexgen Study Picks folder. You're very welcome. And it's actually on your computer. If you type 90-day study into your search bar, it'll come up with it. Actually, just 90 will take you right to that tracking sheet. But steal mine. It's so much easier. So we're going to take the first hour, guys, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. That's the same goal every day. Every day we want to go through and we want to learn these rules. We want to talk about the advantages. We're going to take the words of the rules and associate them with a picture. You guys simulate throughout the day. If you post pictures in the room in the first hour, guys, I promise I'll get to them in the second hour. Remember, the first hour is we're going to talk about the advantages, and the second hour we're going to talk about you guys catching those advantages. The idea is that I want you practicing the correct rules, guys. It's easy to jump in, to jump out. I believe willy-nilly is the phrase we're looking for here. But the idea is that you have this consistent, this statistical advantage each and every time you enter the market. And that's what the high probability trend trade gives you, is it gives you a pattern that's been proven over time, that has been repeated, that is something that you can study and commit to memory, and put you on the path to long-term success. And then we're going to simplify a lot. We're going to talk about the high probability trend trade. We're going to even talk about a medium probability trade, which is where most of your indicators agree for the trade. However, a small issue exists. That small issue is going to be identified through your chart reading. What you learn with the high probability trend trade, it's going to allow you to catch this little problem. It's going to allow you to manage assertively, to take quick profits, to get to a zero loss level. And I'm going to give you a plan for both a high probability as well as a medium probability. And we're going to keep you focused on the best of the best for the new user, so that you can build that confidence, so that you can get to the point to where you're comfortable with what you're looking at. What looks will you commit to? Oh, no, not the dentist, Andy. Smile big for him. I hope it all goes well. Understanding what looks you're going to commit to. That's why we take pictures, guys. That's why it's so important for you to fill up this spreadsheet, because when you see the perfect trade when it's not moving, it's easier to catch it when it is. And we're going to learn those looks so that they become easy. We're going to go through. I'm going to teach you how to study. I'm going to teach you what to look for. And you're just going to ask for feedback every day. We're going to get exactly where you want to be. And I think that's it, guys. Do me a favor. Just write it down on a piece of paper in front of you right now. If you're brand new, I want you to let yourself be new. If you are inexperienced with Nexgen, I want you to be okay with that. We will work together. I am going to help you get to exactly where you want to be. Don't be in a hurry to get to the finish line. Like, lace up your shoes, run the race before you decide that you want to be at the end. And what you'll find is the more simple and focused you keep it, the easier this process becomes. I promise you that. So let's talk about the high probability trend trade. Let's talk about these three rules that only happen on two charts. And I want you to focus on these more than anything. Start talking to yourself in advantages. When you look at a chart, you'll say to yourself, I have the advantage of momentum. I have the advantage of a clear path. And I also have the advantage of an entry area. And when you have these, you'll look for the trade. You'll look to get into the trade. Let me read. John Novak's probably saying something important here. So he says, "Good morning, everyone. Happy New Year. 2024 has 252 trading days in it. All you need to do is make 500 per day average to make 126,000 this year trading a 2-lot. So think $250 on a 2-lot. It's 126 grand. It's a marathon, not a sprint. Amen. Make your money, pass your evals. Then with lots of profit, you can take that 2-lot up to a 4-lot, and then even more profits, you can take it up again. Earn your way up, knowing that 125 this year is super doable if you just wait for the best of the best." And guys, that is probably the truest statement that's ever been said. $250 a contract is not a big goal. And by the end of this classroom, you're going to see that it is achievable without a doubt. So let's talk about the high probability trend trade, guys. Let's focus on the best of the best. And rule number 1 says strong triggers. You must have strong triggers on the large chart. The only way that you can have strong triggers is if you're going with the direction of the large chart. If the large chart is green, behind that most current bar, the market's going up. You should only be looking for rules to be met for high probability trend trades long initially. And this is going to be your safeguard. It's going to keep you going with the people that are moving the market. If the background is red, it's going down. You should only be looking for rules to be met for high probability trend trade short. And this is the easiest way to stay on the right side of things is just don't fight the direction. And you can only have strong triggers if you're with the direction. And I'm going to drop a lot of pictures in the room for you guys. Steal them all. Put them in your spreadsheet. When the background is green, absolutely, you can make money whether it goes up or down. That's the beauty of futures, is it doesn't matter if the market's going up or down. The patterns are the same. They're just flipped. And I'm a huge fan of that. And let me give you a quick example. Ron was nice enough to share one of his trades this morning. And this is just from one of the people that's been with us for about a year. Everything is red and there's nothing in the way. And he takes 6 contracts for $200 each. And his day was done in about 4 minutes. And he's done. He's eating chili dogs on the beach. 11:25. I was an English major. I struggle with the math. But absolutely, whether the market is going up or down, there's opportunities for you. You just have to be able to work through these advantages. So guys, don't focus on the money. Focus on the process that yields the results. It's the same as you've got to have a good swing to hit a home run, right? You've got to have a good golf swing to get a par. You've got to have the proper mechanics to hit that free throw. So we're going to talk about mechanics, guys. And when your background is green, strong triggers, the advantage of momentum means that your small triggers, these solid lines, have broken above and away from the large trigger lines, these dashed lines. And it's the separation between the two. I want you to picture scissors opening, getting ready to cut. When your scissors open and the blades separate, guys, this is strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And you're going to hear it in the room all the time. Odds favorable momentum. You're going to see it annotated on charts, OFM. Because when you have odds favorable momentum, it is the most advantageous, the most favorable look for buying Fibonacci support on a smaller, faster chart using that refinement chart. And you're going to use these tails on the large chart as a study tool because that slow moving broad stroke of a brush, when you have odds favorable, it's going to look like it formed a little tail or a wick. You guys are going to pinpoint using that smaller chart exactly where the bottom of that tail is likely to form, and that becomes your entry for the highest probability trend trade with all that momentum pushing you in the direction of the trend. When the background is red, hey, good morning, Cindy. When the background is red, your small triggers break below the large are wide, they're angled in the direction of the trend. Once again, the scissors have opened. It's time to get some work done, guys. The most favorable look for selling Fibonacci resistance Sababa, there it is right there. You're going to be able to pinpoint where the top of that tail is going to form. You're going to be able to pinpoint where the market is most likely to continue, even when it's going down, to take that high probability trend trade with all that momentum, guys. So strong triggers leads the way. Strong triggers is actually pretty easy to recognize, and I want you to see this. This is the S&P. Guys, what direction? New users, play along. It's actually kind of fun. What direction is the market going right now? Is it going up or down? I'm using the most current bar. Give me a U, give me a D. Don't be shy, guys. This is the gimme here. This is getting you comfortable answering in the room. It's going up, absolutely, Josh. And now check this out. My small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Do you see the space between the two? Guys, this is a market that has the potential to continue in the direction of the trend. This is the strongest trigger look that I'm looking for. That's only the first rule being met, but that's really how quickly it's going to happen for you. This is crude oil, and crude oil is going down. Do you notice that my scissors are not open? My small and my large are kind of overlapping here. I don't have that separation. I don't have odds favorable momentum, and the market appears to be pushing up a little bit. So even though the direction is down, I don't have the best look for momentum, so I'm in a little bit of holding pattern, waiting for the rules to be met. And then in the NASDAQ, it is going up, and I do have momentum. And rule number one is met, but that's only rule number one. So guys, that's how quickly you're going to be able to take these lessons. Focus on the best of the best. And the difference between strong triggers, wide, open in the direction of the trend, the opposite is weak triggers, when the small triggers work their way back to the large triggers. And when you weaken those large triggers with the small, when they work their way inside, anything can happen up or down, and you're going to see it annotated ACH. Anything can happen, which means that you no longer have the advantage of momentum. And if you don't have the advantage of momentum, then it's impossible for it to be a high probability trend trade, and it may move you off to what we call a medium probability trend trade. But you're going to be able to recognize it at that moment's notice, the most current bar. Either there's separation or they're not. Either you have odds favorable or you have anything can happen. So guys, is everybody pretty comfortable with that basic idea? And I want you to see this. We'll do it right on the screen. Odds favorable starting at the left. It pushes down to that anything can happen. And right here, that anything can happen, it precedes a reversal, guys, even without the advantage of Fibonacci. There's no areas on this chart. We're only looking at trigger lines. Anything can happen precedes a reversal. After the reversal, we get that odds favorable. There's one of those tails you guys are pinpointing right where the market is likely to continue, and you can carry it right up to that anything can happen look again. Probably a key area up here somewhere, but there's your reversal from those weak triggers. Odds favorable pushes it, anything can happen, reverses, you get odds favorable. And then guys, we get into really what I think is a huge safeguard for being a rules-based trader. It's a huge safety net for you guys that want to make sure you have the best of the best. The market transitions every now and then. Buyers and sellers fight. The people that move the market, not us, we don't. We're just along for the ride. But these guys are going to try to make it go up and down, and they're going to fight one another. And when they do this a lot, you're going to see it in the trigger lines first. You're going to see small and large triggers that don't agree. And if they don't agree, they can't be strong. You're going to see trigger lines that don't agree. Anything can happen. Don't be sorry. Don't ever be sorry for asking a question. ACH is anything can happen. This is what we relate weak triggers to. Because what it does is it verbally creates this confidence. Anything can happen lets me know that I no longer have an advantage. Odds favorable momentum, that space between the two, lets me know that I'm in the best position to buy that Fibonacci support. So you get to the point to where you associate these words with the looks. And when you do that, you begin to speak to yourself in terms of advantages. And when advantages are present, that's when you should be looking for trades. And then notice how here Larger red, smaller green. I don't have an advantage because they're not both wide and angled in the direction of the trend. Here they're both red. The background is green. I can't have strong triggers. There's that transition phase. And if you guys start on day one telling yourself, if my rules aren't met, I'm not taking a trade, you don't get caught in this transition. You simply wait for somebody to win and provide you that odds favorable. And that is rule number one, guys. Rule number one sets the tone for everything. Rule number one, the advantage of momentum. Man, that's going to push the market in the direction of the trend. Rule number one is going to be the force that breaks these key Fibonacci areas. Rule number one is going to cover up some of the mistakes that new users make. Always having that advantage of momentum, guys, it's monumental for the new trader, even for the experienced trader. Because what it does is it's letting you know that you have a loaded down freight train of momentum going in the direction. And when you have that, the market's likely to continue. Is everybody good on rule number one? Give me a Y in the room if you are. It's a pretty simple look. It's the separation. That's all it is. And then once you have rule number one, you have to make sure that you have a clear path, guys. And this is pretty outstanding. The NASDAQ is putting on a lesson right now. Do you see how that key Fibonacci area, that big red fib, even with that momentum, look at the reaction. All the way down to that Fibonacci support. Even with momentum, that blue fib creates a giant bounce. Guys, our advantages come in between these areas. Our advantages show up, the best of the best, not at the decision-making points, but in the gaps between them. So rule number two is going to be designed to give you a clear path. And it says no termination conditions. None of those likely to stop areas. And these termination conditions, I want you to think about them. These are areas where decisions are made. These are areas where the people that move the market are making decisions. Maybe this is where the buyers buy or where the sellers sell. These can also be areas where profits are being taken. Guys, the people that move the market know where these numbers are. They know what's going to happen at these numbers. You guys have the advantage of knowing where those areas are, and I'm going to give you a simple recipe to understand whether or not that area is likely to hold or whether or not that area has the potential to break. But these are the areas right here, guys. We're going to look for red Fibonacci resistance, blue Fibonacci support. We're going to look for these yellow 1-to-1 dots. I'm also going to look at divergence high lines. This is a magenta dashed line that shows up on your chart when there's a loss of momentum at a pivot from a high. Or these divergence low lines, which is a cyan line that is formed from a pivot when there's a loss of momentum at the low. So these areas are where the decisions are made. And I'm going to go back to the tops and bottoms section here in the user guide. And we're going to talk about the difference between a termination condition and a clear path. So we're going to start with a termination condition. It begins with price reaching an area. Price reaches an area, guys. It's the most important part of determining whether or not an area is a termination condition or not. So price reaches the area, which means the sellers push it down. These bars come down. And when they reach this blue fib, it's time for decisions to be made. And there's a couple different things that can happen. The sellers may abandon their position, right? Making it easy for the buyers to push, to reverse the market. The buyers may want to enter a position, which means that there may be a huge fight right at this key area. Or the sellers may see a line beyond it. The buyers don't care, and all the momentum may just simply break the area. If you accept from day one that you don't know what's going to happen, you don't know what decisions are going to be made, nobody's calling you and saying, hey, this is what we're going to do with the blue line, you can keep it pretty simple and pretty focused. So when price reaches the decision making, when the price bars come down and reach Fibonacci support, if none of the trigger lines are through that area, if they all remain above support, you've reached a termination condition. You've reached an area that has the potential to stop the market. And guys, if the potential to stop the market is there, then it cannot, under any circumstances, be a clear path. There's something in the way. There's something between you and your target. So the only option for you is to sit on your hands and do nothing. Just wait for a second. Let's see what the reaction is. Is everybody good with that? And it really is pretty simple. Price reaches the area. If the triggers don't break, sit on your hands and do nothing. Guys, that's your termination condition. We want a clear path. Well, what does a clear path mean? It means that up here where price reached Fibonacci support, the triggers remained above, we don't know what's going to happen. And we're like, man, let's just sit on our hands and wait. Let's see if they're going to break it, if they're going to fight, if it's going to reverse. I just don't know. Well, what does happen is both the small and the large triggers get below support. When they get below support, support is behaving as resistance now. It's changed teams. You have odds favorable momentum. Guys, the path is clear. When the small and large get to the other side of an area, the path is now clear until it reaches the next area. Notice that you have odds favorable momentum. Now you have a clear path. And guys, there's your tail. There's your potential entry on a smaller, faster chart. Getting into the market with the advantage of momentum. Getting into the market with the advantage now of a clear path. And all that momentum carries you to where the market is likely to go, that next key Fibonacci area. And guys, you're going to see termination conditions all day. You're going to see resistance hold to support and right back to resistance. Look at this. And now all that momentum breaks an area, doesn't it? And now we're back into support with weaker triggers. Look at the bounce. It's pretty outstanding because if you go back in time and you just look at these, you'll see that momentum can break an area. Eventually resistance behaves as support and off it goes to the next key area. Resistance holds and pushes it all the way back down. So all you're doing is you're starting this recognition process. Is this area likely to hold or is it likely to break? And if it's broken, I'm going to look for a trade. And if it's not, I can sit on my hands. And guys, these are going to happen all over the place. Price comes down and goes back up. Notice that all of the triggers begin to break through this Fibonacci area. This blue Fibonacci area is not behaving as a termination condition because the price or the triggers have started to go through. But there is a loss of momentum. Price creates this. It doesn't reach it. Pushes back up. When price returns and reaches this divergence low, you ask yourself, where are the triggers? And if they remain above the divergence low, well, you have a termination. This is what we call a pivot stop out of a prior divergence line. This is a big line in the sand where the buyers said, we stole your momentum, we triple dog dare you to come back and hit it again. And when they do, look how they unload. This termination condition reverses the market, gives a clear path, provides odds favorable. This is the precursor. This is what we call a strong bottom. This sets up the highest probability trend trade that you can take. And this look will also be the look that maybe gives you the idea that the next areas may break. Pivot stop out at a high. There's your divergence. Price reaches it, triggers remain below. Another termination condition that reverses the market. This one becomes even more powerful because notice how it's right there with Fibonacci resistance. So guys, the recipe didn't change. Price comes up, the path is clear, everything is going up, and when it reaches Fibonacci resistance, not one trigger is capable of breaking through. When you get there, sit on your hands and do nothing. Relax, just wait. Let's see what the reaction is. In this case, rule number 2 keeps you safe, and the market pushes all the way back to Fibonacci support. It's giving me a little bit of a hiccup here. There we go. James Bird, those are a byproduct of calculations being run in the background to let you know that there was a loss of momentum. And to be honest with you, James, you can just ignore them. One number isn't better than another. It's not bigger or stronger. It's really just kind of, it's emissions at this point. It's coming from the divergence producing factory, and that prints letting you know that divergence is true along with this magenta line. But there's absolutely no bearing. Divergence was described to me is it's like pregnancy. You either have it or you don't. You either are or you are not, right? And if you have that magenta line, if you have that negative number, divergence is true, no matter what the negative number is. Great question. Very common question. No long trades into resistance. The triggers remain below, and thank goodness it pushes all the way to support, and the triggers remain way above. No short trades, right? And then support holds. Dagnabbit. And it goes back up to resistance. Hey, good morning, Abdulaziz. Nice to see you. And when it comes back up to resistance, the triggers remain below. That's a termination. And it reaches the divergence high. And the triggers remain below. Don't ever forget the recipe. Price reaches where the triggers. Price reaches the second area of resistance. The triggers remain below. Guys, you have 3 termination conditions in the exact same location. This is powerful. It does reverse the market. Small get below the large, right? The large roll. The path is clear because we haven't reached Fibonacci support. The momentum is good, and there's one of those tails, guys. There's your potential entry for the highest probability trend trade. We're going to talk about those entries, but right now we're just gauging. When do I have momentum? When do I have a clear path? And then we're going to go through one more. So in the long trigger, no, not necessarily. So what we're talking about right now is just a simple recipe. Because look at this one. The triggers hit the fib, right? And they just kept going. And the triggers hit the fib, and they just kept going. So what we're doing right now is we are developing this ability to be patient. We're developing this understanding that these key areas are where decisions are being made. And let me see if I can illustrate it with this one. The sellers are in control. The sellers are pushing. The sellers have all the momentum behind them. Look at the space between the small and the large. This is odds favorable momentum. And when they reach Fibonacci support, it doesn't even blink. They go right through it. And then it reaches these yellow 1-to-1s. Here at Fibonacci resistance, we sat on our hands and we waited until small and large got to the other side, and then it was game on. But we reached that next key area. And then when we did, the trigger lines remained above. Does that make sense? All we're doing is we're just waiting to see what the reaction is. There was no reaction here, and it broke because of the momentum. But when we got here, the triggers remained above, and we just had to say, let's wait for the reaction. Well, the reaction is pretty outstanding. The buyers push really hard, and that market bounces aggressively. If you tried to take a short trade into the 1-to-1s, you were stopped out pretty quickly. But the sellers weren't done. All the triggers are below resistance, and the sellers push back. See how the trigger lines don't agree? I don't have momentum, nor do I have a clear path. There's nothing for me to do while the forces that be fight it out. Does that make sense? You guys knew to sit on your hands and wait for a second. Let's see what the reaction is. Guys, this is the 90% of your day. Waiting for buyers and sellers to fight it out. Waiting for them to establish supremacy. Once they do, I want you to see what happens. Small and large get above resistance. It begins to behave as support. We haven't reached the next fib. There's a clear path. And it's coupled with odds favorable momentum. And there's that tail. We're about to talk about how to pinpoint where that tail is likely to form. That tail right there, guys, this is your 10%. This is where your patience is rewarded. That is where the market is most likely to continue. And it's a clear path. And it has momentum. And it's coming from a termination condition. You did nothing while they fought. And then once the fight was over and the buyers won, you guys were able to capitalize and take it right up to that key Fibonacci area. This is all we're doing right now is we're looking for that highest probability trend trade that happens after a termination that reverses the market. And the recipe is really consistent, guys, and it takes a little bit of patience. Um, this is my is it broken? And this is the easiest way for new users to stay on the right side of things. If price reaches Fibonacci resistance, none of the triggers have gotten above the area, sit on your hands and wait. You just don't know what's going to happen. And that's hard for a lot of people. We're all very alpha, right? A personalities. I like to be in charge. I don't like to be told what to do. Guys, the reality is you just have to sit still. It's either going to break or it's not. I don't know. I never know. I'm never in charge of the market. But if the small and the large get to the other side of resistance, well, now it's behaving as support. And you'll notice that there's odds favorable momentum. There's your tail, guys. Y'all are going long there eventually. And this is pretty black and white for the new user. Either it's broken or it's not. Either the path is clear or it is not. And this is rule number 2. That's what we've just defined. Well, there's another scenario, guys. There's always another one, right? You're going to continue growing. For the next 20 years, you're going to continue growing. This is using momentum. Remember I said momentum can break areas. It's not guaranteed to break areas, but it certainly provides the potential. When your small triggers break through the area where the decisions are being made, but the large triggers have not, 50% of your trigger lines have cleared the area, 50% have not. When you have odds favorable momentum, when you have the best of the best trigger look, guys, 6980 has the potential to break. But it's not broken yet because the large triggers haven't cleared, which means that it's not a clear path. Is everybody comfortable with that? No triggers, it's not broken, you don't know what's going to happen, do absolutely nothing. Small triggers with odds favorable momentum, it does have the potential to break. Both triggers, now the area is broken, now the path is clear. You're going to use this potential to break look, guys, when you don't have a clear path to take your first medium probability trade. Your chart reading identifies that the path isn't clear. You're going to be able to insist on momentum. You're going to be able to insist on the perfect entry area, and you will look for opportunities to take this trade if the conditions are right. But even this first slide reminds you that with odds favorable, that area isn't broken. It only has the potential. So your best safeguard as a new user is to make sure that that path is clear initially. That's your highest probability trend trade, guys. Everybody good with that? Here's the recipes one more time. I'm going to encourage you guys to steal this picture. I'm going to share a lot. First day of the year. Termination conditions at a high. This is the pivot, guys. Price creates this pivot. This is not price reaching. This pivot lets me know that there was a loss of momentum. When price reaches the divergence high, triggers remain below, now it's a termination. And if the termination reverses the market, that's a strong top. That's the precursor for the highest probability trend trade short. You see it at resistance, triggers below, it's a termination. 1-to-1s and resistance, triggers remain below, it's a termination. Guys, give me a Y in the room if you're with me, if you're okay, if you feel comfortable. We can go through and look at it in the live market as well. Here's termination conditions at a low. And look at this little double hit. Price reaches the 1-to-1s and the trigger lines don't break. Remember that fight that we don't have to be a part of? No reason to take that short trade. Ultimately, it reverses the market. It gives you odds favorable with a clear path. There's your highest probability trend trade. You see it at support. There's your divergence low. There's that pivot that says there's a loss of momentum that is not a termination until price reaches it and the triggers remain above. Guys, steal these pictures. Termination conditions are probably the most broken rule for new users. And again, if we go through, you'll be absolutely amazed at the power that these have, right? And when a termination creates a full reversal, that gives your best of the best. And that's what's going to set you up to start taking advantage as the market creates opportunity. And look at that. All the way down. This is kind of a cool picture here. We don't know what's going to happen at support. When it breaks, it behaves as resistance and the market continues down. Support breaks, behaves as resistance. The market continues down. And now we're right at Fibonacci support again, guys. And it came directly from a termination condition. This is the power that these have. NASDAQ is putting on an absolute clinic today, and I love it because the NASDAQ doesn't know that you're trading it, but the patterns happen every day. So there's one more termination that I want to talk about, guys. And I'm slow rolling a little bit today. This will be a great video to go back and look at if you're just learning rules. Sometimes the market turns from nowhere. Sometimes it happens from lows, from highs, even with odds favorable, momentum, and a clear path. You're not going to see that change on a large chart, guys. It's just moving too slow. But what you can use is your smaller, faster chart. And this will be the only termination condition that I respect on that smaller chart, that entry chart, that refinement chart. And it's 3 divergences, 3 losses of momentum. It may terminate the trend. You'll see it visually from a low. 3 cyan lines coming off of pivots may terminate the trend. From a high, 3 magenta lines coming off those pivots may terminate the trend. It's not guaranteed, but it takes away my advantage of a clear path, which means that I can't have a high probability trend trade. These 3 divergences become more powerful when your small triggers work their way inside of the large triggers. Remember that lesson that we had about anything can happen triggers? There's that ACH. Anything can happen with my momentum and I have 3 divergences. Well, that's a more powerful look. And it becomes more powerful still, you guys that grew up learning those patterns. When your third pivot is higher than a previous in the low or lower than the previous from a high, creates a little head and shoulders pattern. That adds some fuel to the fire for this potential termination condition. Guys, 3 in the same place is strong. 3 in the same place with weak triggers is stronger. 3 in the same place with that head and shoulders is strongest. If you see this look on your smaller, faster chart, it's just that red flag. Hey, don't take that next short. Don't take that next long. You'll also be able to use it as you get into medium probability trades to manage your trades. If you took the perfect trade, but maybe the path wasn't clear, these 3 divergences help you manage out of that trade when it's time to take profits. If you take the perfect trade, even if the path is clear, these 3 divergences are going to help you get out before you take a loss. Hey, good morning, Jose. Happy New Year. And you're going to see this look from a low or this look from a high at times when the market is turning. All right, so Sababa, I know that I'm probably messing up your name, and I apologize. Let's go ahead and do this one real quick. And this is for all of my new users. It's a lot of information. Guys, this is us on day 1. There is so much coming at you on day 1. I know that. I understand that. I've been day 1 myself. I want you to be okay with the idea that you don't have to know it all on day 1. But what happens is as the days come together, things begin to click for the new user. Things begin to really take shape and make sense. And I always encourage you guys, let it be easy. Don't try to get to the end yet. So, Sab, first we learned direction, right? It's either going up or down. That's pretty easy. It's just a color. Let it be simple. Once you have the color established, let's match momentum to go with the color. That's the second step. And this is where most people get stuck on day 1. They're like, okay, I got the momentum. That's great. This is cool. I can do it. And then Mark throws termination conditions in. And this is where you're like, oh my God, this is starting to turn into an awful lot, right? Let me take 3 or 4 days just focusing on termination conditions. Let me take the next 2 or 3 days and let me just go back to my large chart. And let me say, all right, it reached, it broke. And I'll just kind of go through and look at it. When did it stop? When did it break? What did it look like, right? Look at rule number 2, keeping you safe all through this consolidation as the new year rang in. So you stay focused, starting with direction and then adding momentum. And then with momentum, you look for that clear path. And then finally, you're going to refine it down to an entry area. If you try to take it all in on day 1, it's a lot, man. I know that it is. So let it be like, just enjoy the ride today. kick back, listen. Some of it will stick, some of it won't. But ultimately, what you're doing and what you're giving yourself is this opportunity to piece it all together, to find that high probability trend trade. Guys, you're building a foundation. And you are going to see other people in this room that are where you want to be. And that little green monster is gonna show up, right? That little envy. Well, I want to be able to do what they're doing. Well, they're putting in the repetition. They're putting in the time. Guys, it's the best software in the world. You just have to learn to read it. And that's what this class is designed for, is to teach you to read the software. And nobody has ever in the history of the software gotten proficient at it on day one. So, Sab, let yourself be new. You're going to be just fine, I promise. I have never abandoned anybody on their quest for knowledge. And that's us. That's all of us on day one. Thank you for saying that, though. I know it's a lot. So we've talked terminations, right? We have talked about, and we're beginning to use that language of strong triggers, creating the advantage of momentum. Price doesn't reach an area, right? Or the triggers break. Identifying a clear path. And guys, clear path takes a little more time because there's a few more things to think about, right? So for the brand new user, let it be simple. You either have a clear path or you don't. Don't worry about those 50-50 trades. Don't worry about those medium probability trades yet. Focus on keeping it simple, keeping it clear, and let it be known that you will sit on your hands, that 90% of your day will be spent just gauging, waiting for these advantages. But once you have it, once you have strong triggers, once you have room to the profit target, no terminations, guys, we're going to go to that smaller, faster chart. We're going to go to our entry chart. So this is where we're going to refine the broad stroke of a brush. And if you remember, the large chart defined direction, it defined momentum, and it defined the areas that may be problematic. Guys, 2/3 of our advantages come from the large chart because the large chart is what the large crowd wants. The large chart is what the people in charge are doing. There's no reason to fight their direction. There's no reason to fight their momentum. And when they don't have anything in the way, guys, it's unrealistic to expect them to reverse and go the other way. So we use the large chart. It keeps us safe in a lot of instances. And then you get the small crowd, the small chart, these yahoos that are willing to fight momentum and direction and all of that. And they typically fight and they give a little push. And that little push is exactly what we want. That little push gets you guys back to the point where the market is likely to continue. And that's where rule number 3 comes in on that small chart. We are defining where that tail on the large chart is most likely to happen. And we're going to use a limit order, meaning that you'll be able to wait for the market to come to you. And you're going to use a limit order at an area. The large chart defined areas that were problematic. The small chart's defining is using these areas as a point to continue with the trend, as a point for entry. And the areas that we look for are going to be Fibonacci support or resistance, yellow 1-to-1s, or the mid-band. And the key is we're going to let those areas be inside of what we call favorable large triggers. So if you take the whole verbiage for rule number 3 says that we're going to use a limit order to buy or sell a pullback, that little retracement that is created by the small crowd. And we are going to buy, in this case, because everything is up, at an area, fibs, mid-bands, yellow 1-to-1s. But the key is we want these areas to be inside what we call favorable large triggers. And favorable large triggers means that the large triggers, the slower moving average, and the synthetic triggers, just the large triggers from your large chart that happen to be on your 5-1, when these are overlapping, one on top of the other, guys, this creates your smallest window of opportunity, your smallest bounce point. This gives you the least amount of risk going into trades. And this is where the magic happens. This is where you're going to wait with a limit order to get into the market. So favorable large triggers creates a huge advantage. It's going to allow you to reduce your risk. It's going to give you a more consolidated point of entry. And we're going to use it and just wait for the market to come to us. So I'm going to go through the whole sequence on the entry. And I've got these pictures, and these pictures are also in the spreadsheet that I gave you guys. Everything starts on the large chart. Everything begins on that slow moving chart. And we're looking to see, well, the market's going down. I have strong triggers, small below the large are wide, they're angled in the direction of the trend. And because both small and large are below my trouble areas, my path is clear because I haven't reached the next area of support, guys. This is the key. Let the large chart lead the way. Let the large chart tell you that it's time to look for an entry. When it does, we have to wait for the small crowd to fight, and that begins with a reversal bar. In this case, you get that green bar when everything says down. All those down bars, down triggers, everything says down. And we want the market to come up to us, guys. That's how good we are. And at the time of the reversal bar, you're going to do a couple things. First, you're going to identify your favorable large triggers from the top line of the triggers to the bottom line of the triggers. So remember, the tighter they are on one another, the more they're overlapping, the smaller this area becomes. This overlapping, these trigger lines are not our likely to continue spot. These are not our window of opportunity for entry. We're going to look inside of those trigger lines for areas. Fibs, mid-bands, yellow 1-to-1s. In your window of opportunity, the point where the market is most likely to bounce is going to be from the closest area of resistance. There's a red fib there that's kind of hard to see, to the furthest area of resistance, this mid-band, inside the favorable large triggers. And I want you to embrace that phrase for me, inside of favorable large triggers. These are moving averages, and the averages love to correct. When we give them an area inside of those triggers, it creates a bounce point, like you're throwing a tennis ball up against a wall. So we've created our window of opportunity from the lowest point of resistance to the highest point of resistance. Your job is to activate a limit order right at the bottom of that window, a tick or two below. And this is the closest point to price. This is where the market is most likely to continue. We get in at the closest point because remember that your large chart has odds favorable momentum and your large chart has a clear path. The large chart, which leads the way, says that this market is screaming down, and we're not expecting the small crowd to get a lot of work done. So you're going to activate a limit order at the bottom of the window, and you're just going to pray. Hopefully the small crowd pushes it far enough. If they do, if it hits your limit order at the lowest point of resistance inside of favorable large triggers, you are in a short trade. You're in a short trade with odds favorable momentum through strong triggers. You're in a short trade with no termination conditions, that clear path on the large chart. And now you're in a short trade with the area inside of favorable large triggers where the market is most likely to continue. Guys, this is your high probability trend trade. That whole sequence is in the upper left-hand corner on the third tab if you want to look at it. This entry is exactly what you should be focused on for the first 20 days, guys. This entry, and I'm going to take this picture too and go through it. This is a short trade means that you sold the market. So you were curious about whether or not we could make money going down. So a long trade means that we buy, and a short trade means that we sell. That's all it is. The patterns are the same, and I want you to see it here on this one. Cool. This is only the entry chart. The large chart said odds favorable momentum. The large chart said that we had a clear path. You guys waited for the reversal bar. At the time of the reversal bar, from the top of the triggers to the bottom of the triggers is where you're looking for areas. Guys, give me a Y if you're with me. Reversal bar forms. We're looking for the triggers, favorable, wide, angled in the direction of the trend. This is not your window of opportunity. Your window of opportunity is from the highest point of support, that mid-band, to the lowest point of support, those yellow 1-to-1s. See how it refines. This white box represents where the market is most likely to continue. This white box is the best of the best, and you're going to wait for the market right at the top of that window. And if it gets there, you're in a long trade. Momentum, clear path, point where the market is likely to continue. Guys, this is your entry. But there's some things that you have to keep in mind. This is a smaller, faster chart. It's just a refinement chart. And there's going to be a time where it goes right past your entry. You're in the market. and it continues down, and you're cool because you're still in the window, and it continues down, and it's okay because you're still in the window. And one of the greatest things about what we do here at Nexgen is you're able to manage your risk before you ever manage your profits. And if you know where the market is most likely to continue, if you know where that third advantage comes from, well, you also know where the market shouldn't go. It shouldn't go beyond that window. 4 or 5 ticks, you'll give it a little wiggle room. But if that market for some reason decides to push below that lowest point of support, if it decides to push beyond that window of opportunity, it's going to run headfirst into a protective stop. And when it does, hey, good morning, Ace. Good to see you. You're going to take a loser. And that's a little traumatic for a lot of new users, guys. I don't want to take a loser. It hurts to lose money. Anything that wins 70 to 80% of the time, guys, it has to lose 20 to 30% of the time. It will be rare that you have 100% winner days, and that's okay, because through this methodology, you manage risk before you manage profit. You're in a position to lose less and win more. This 20 to 30% is a cost of doing business. It's a normal part of a positive equity curve. But the idea is that I don't want you guys worried about anything other than the best of the best entries initially. Because this is the look when you take this trade that typically 70 to 80% of the time when you follow the rules, it's profit target reached. Guys, this is a trade that provides a statistical advantage. This is a pattern that creates confidence through the memory of success. This is a pattern that teaches you to read your charts so that you can recognize advantages, so that every time you look at your chart, you understand if there's momentum, if there's a clear path, where that entry area is going to be. Guys, this is your focus. And once it starts moving in the direction of the trade, you can even reduce your risk below that reversal bar, managing risk before you manage profits. Things that new users panic about. But Mark, we almost hit a red fib. This is where the magic of the refinement chart comes in, because you wait for the pullback. And because you did, your profit potential is increased dramatically. Because you wait for the pullback to that bounce point, your risk is reduced dramatically. And guys, this is your focus for 3 days. For the first couple weeks, 3 weeks, is just go back and build a little comfort. Go back and build some recognition. Take a lot of pictures, guys. And if you go back to your large chart and you circle one of those tails, this is how you study. And I want you guys to study. I want you to go after this with the intent of proving me wrong, because I don't lose people that try to prove me wrong, because this is a pattern that works. Whether the market's going up or down, whether you're trading stocks, futures, options, I don't care. The market repeats itself. It's all emotional. It's cyclical. And Fibonacci gives you a huge advantage of knowing where to buy and sell. When you have odds favorable, when everything says up and the path is clear, if you scroll back historically and circle one of these tails and it lines up with an area of support inside of favorable large triggers, you know you have a high probability trend trade. Remember, we don't trade the tails, because by the time this bar fills, it's all the way up here, right? It's done. You can pinpoint your entry using a smaller, faster chart. So if we go back in the market, just for grins, this termination creates a full reversal. Where did that pullback come to? Directly to resistance, right there inside of those large triggers, guys. It's not the perfect trade there. But the pattern repeats itself over and over. And you can come through and you can continue to see these patterns happening over and over at 9:30. Let's see what it looked like. Right back to the resistance, right at those triggers. Notice that they're split. The window's a little bigger, but the momentum for the win. And then you get into a little weaker triggers, pulls right back to resistance that used to be support, continues down. So you can go through and you can really start pinpointing when there were advantages, when there was momentum, when the path was clear, and it pulls right back to that mid band, right back to those yellow 1-to-1s, right at the edge of those large triggers. So scroll back. How many times does it happen during the day? There's a termination that created a full reversal. The full reversal gave me odds favorable momentum. and right back to the mid-band, right inside of the large triggers, guys. This is the pattern. This is your focus. This is the best of the best. And it's into Fibonacci resistance. And the triggers didn't break, and you said, I'm not taking that long from the mid-band inside of favorable large triggers because my path wasn't clear. Pretty cool, right? So guys, this is the same hour, every day. We're going to talk about the high probability trend trade. Your job is to take some time to study it, to learn it, to ask a million questions until you're comfortable with it. I'm going to give you a checklist right now that keeps you focused on the best of the best. For you guys that are new, there's a video link coming from a good top or bottom. Is it a termination that creates a full reversal? Watch that video tonight. Did you have odds favorable momentum? Were there no termination conditions? Was your area inside of favorable large triggers? I've never had anybody check yes to each and every one of these and do worse than 70%, guys. Let that settle in. I've never had anybody in the history check yes and do worse than 70%. So great question. Why is there more than one large trigger? Which one to follow? Awesome question. So there's two triggers, and let's go back and I want to show you this. The smooth of the two, that's your large trigger from your entry chart. So give me a Y if that makes sense. See how we have a large and a small? Large and a small. This is your small chart, large and small. What Nexgen has done is if you take the large trigger from the large chart and you put it onto the small chart, when they overlap, when they run together, it creates an advantage. And it creates that advantage of what we call favorable large triggers. And it's not a matter of deciding which trigger to take your entry from. What you're going to be able to do, and let me find a good picture for it right here, is when they're overlapping, it's not the trigger lines that we're trading from, it's the areas inside of them. Does that make sense, everybody? So the tighter the triggers are on top of each other, the smaller the spaces for areas to be, which means that there's a smaller point of continuation. So it does, Haji. They're not favorable if they're not overlapping. Favorable large triggers is literally the definition of when the large and the synthetic are overlapping one on top of the other strong in the direction of the trend. Why do we use the term favorable? Because guys, look at this just from an entry standpoint, and I think you guys will like this. If I'm drawing a box from the top of the trigger to the bottom of the trigger, that's it. That's the entire spot. It has to be, my areas for entry have to be somewhere inside of this range, from the top of the triggers to the bottom of the triggers. Does that make sense? The triggers are not support, they're not resistance, they're just defining where the areas is. So guys, when they're overlapping, when they're tight, I've got a mid-band and I've got a fib. My window of opportunity is literally that big. And I'm not going to lie, it's pretty kick-ass to have an area that small where the market is likely to continue. And because favorable large triggers creates this advantage, these one-to-ones that are outside of the favorable large triggers, guys, they're not a part of your window of opportunity. Neither is this support. Your window where the market is most likely to continue is right here. Whoops. That's it. You have refined that large chart down to the most simple, basic, smallest area for continuation. So Sab, if they're one on top of the other, it creates a huge advantage. As they begin to not agree or separate from one another, that potential window of opportunity grows exponentially, which means that you're going to put more and more risk on that trade. Does that make sense? So here, areas inside of favorable large triggers. So if I draw the box from the top of the trigger to the bottom of the trigger, see how it's a little bit bigger because they're not one on top of the other? But fortunately, and this is where rule number 3 creates such a huge advantage, the window of opportunity is that area inside of the triggers. So that midband was the only one that fit the rules. And sure enough, that midband is exactly where the market bounced. So I use the term favorable large triggers to remind you that the tighter they are on top of one another, the smaller that window of opportunity is going to be. The easier it's going to be to find that point of continuation. And then if you use the checklist, guys, if you use this checklist every time you get into the trade and you insist that it's yes across the board, well, you've created a statistical advantage. You're trading a pattern that has been proven through 25 years in Nexgen to provide a trade that typically wins 70 to 80% of the time. So I'm going to give you guys the checklist right now. I'm going to drop that into the room. I want you to print this out. I want you to put it on your desktop. When you do market replay, I want you to pause and I want you to look and say, hey, are my rules met? And then some of us are visual. I'm very much a visual learner. Here's the same checklist, but I stole pictures from the resource material. So is the market coming from a good top or bottom? Once again, there's that video of my brother being really smart for 45 minutes. There's a termination that creates the reversal, gives you rules met, guys. That's your best of the best. Here's your strong triggers. There's your weak triggers. Anything can happen up or down. Visually, you're now taking the words of the rules and you're associating them with the looks. Termination, no clear path. Potential to break, now it's broken. Defining it when it's standing still so you can get it in the moment. And then this is probably the most important one, guys, is being able to get into that market where it's most likely to continue. Here's your window of opportunities, and I'm going to make that just a shade bigger because I want you to see this because it kind of brings it all together. Reversal bar starts the pullback. From the bottom of the triggers to the top of the triggers, your window of opportunity is the area inside. Your limit order goes below that area. It literally walks you through it, and it reminds you that because these are outside of the triggers, they're not a part of the window of opportunity. Same thing for the long trade. Guys, take this one, put it on your computer, study it for 5 minutes before you get into the day, before you start looking for trades. Make sure that you can associate the looks, with the rules. I don't know what I just did there. It's so small. That's a 15%. My bad. There we go. And then, guys, it's just repetition, right? It's just studying at this point. You're taking these looks, you're scrolling back, you're finding these pullbacks, you're finding these entries, you're finding these termination conditions, and you're just taking pictures of them, right? And when you find a high probability trend trade, well, you're taking that picture, you're dropping it in. Rule number 1 says strong triggers. Rule number 2 has no termination. See how the rules are being written on the chart? Rule number 3 says pull back to an area inside of favorable large triggers. You sell to get in, and you buy to get out. And you do that with stops and targets, guys. And you can do this. Go back and study. And that's your best of the best. And then now I'm going to give you a plan. So for you guys that are brand new, for you guys that are at the beginning of your marathon, this is a stepping stone in your journey. And this frustrates a lot of people. And I'm going to share something that I put together this weekend with you guys after we do this. But this is a stepping stone in your learning journey, guys. It's designed to optimize your chances of success with the high probability trend trade and that 50-50 trade, that potential to break trade. It's going to be through simulation, study, class feedback, and continuous practice, guys. You're going to create a plan that suits your needs. You're going to create a plan that makes sense to you. You're going to create a plan that takes the patterns that you recognize easiest, and you're going to create your trading plan. That's what this second tab is for, guys. These are your personal trades. This is what it's going to take to get you in the market. You should have 50 pictures of your perfect entry for long. You should have 50 pictures of your perfect short, right? You're ingraining this look to memory so that you can catch it when the market is live. But your simple plan for consistency starts with just two very simple trades, two very basic trades, the high probability trend trade and that 50-50, that medium probability without a clear path. And your plan for consistency begins with never fight the large chart direction, guys, or don't fight the momentum on the large chart. This is put in all bold caps on here because this is going to eliminate about 60% of the mistakes that new users make. Patience is difficult. The most difficult thing that you'll ever do as a day trader is absolutely nothing. Learning to read the indicators isn't difficult, guys. You'll have it down within a week. You'll understand momentum and terminations. You'll be able to pinpoint entries within the first week. I'm very confident of that. You'll spend the next 3 to 6 months trying to eliminate your opinions. Just doing nothing when there's nothing to do, when there's not a statistical advantage. Define your entry first. Take 20 days, guys, and just focus on getting into the market in the right spot. Because when you do that, is there a supporting example document to help in your plan? Sab, I'm literally giving you this right now. I just dropped it in the room. I'm literally laying this at your feet and saying this is your best chance of success as a brand new user. Focus on this for 30 days. And I'm going to give you something to build your own plan when we're done. But learn to get into the market where it's most likely to continue, guys. Once you have a great entry, it creates an opportunity for management. And this entry that we've gone through is very mechanical, right? It's very opinionless. I don't have to hope the market is going up. I'm literally waiting for the market to go up. And I don't have to hope that it creates momentum. I'm waiting for that momentum to be created. And I don't have to hope that an area breaks. I'm going to let it break the area so that I have all of these advantages in place. Your management as a brand new user should be just as methodical and pragmatic, and it should be designed to pull those emotions, those opinions out, rather than saying, I hope the market breaks all these areas, I'm just going to hold this position forever. You can be very mechanical, methodical, if then, and that's what this management plan is designed for. And the management plan is designed based around the correct entry. So you focus the entry first, right? Horse before the cart. And if you get in at the area inside of favorable large triggers, well, your initial stop goes where the market shouldn't. It goes beyond that window, past that last point of support or resistance. This is it. This is all you can do once you get in. You're powerless at this point, guys. You don't know whether or not it's going to go up or down. But what you do know is that you have the advantage of momentum. You have a clear path, and now you've entered where the market is most likely to continue. And Sab, all you have to do is let me know what kind of example you're looking for. I'm going to give you everything. And if I don't give you what you need, all you have to do is tell me what you need, and I'll get you squared away. But guys, this is the first part of management. If I take an entry inside of favorable large triggers, then my stop goes where the market shouldn't. And I'm either going to get stopped out, normal part of the positive equity curve, or the market's going to give me a reversal bar in the direction of the trade. And all of this mechanical management, guys, it's not only in the KISS trading plan, it's also in your spreadsheet. And if I get a reversal bar in the direction of the trade, then my new stop is 2 ticks above that reversal bar. Or for a long trade, 2 stops below the reversal bar. And I'm still powerless, hands in the air, rolling back 6 feet from my mouse. I'm either going to take a small loser. Again, it's normal, it's okay. I want you to be all right with taking losses. I want you to be more concerned with the execution of the methodology. I want you to be more focused on having the advantages in the beginning rather than worrying about wins and losses. But if I get this reversal bar, my loss is guaranteed to be smaller. I've moved my stop, and now the only thing for me to do is either let that stop get hit or my first target. And in this KISS plan, this simple plan, guys, your first target is $100. You have a freight train of momentum in your favor. You have absolutely nothing to create a bounce. This $100 target is pretty easy to hit more often than not if you're following the rules. And if you hit it, You're paid. You have confidence. You're feeling great. The serotonin's flowing. Everything is wonderful in your life, and you're going to move your stop to break even. You're going to say, not only did I get paid, but also I have zero risk on this trade. And that is done not because $100 is the perfect target, not because break even is the perfect stop, but this is done to help you focus on the idea that the large chart is why you're in this trade, that the large chart has momentum and a clear path, that you're letting the large chart lead the way. And it makes it easier to hold for that second target, guys. And for the brand new user in the KISS plan, the second target is only $200 away, which means that 2 contracts, 2 profit targets, $300 in the highest probability trend trade that you can take. And $300 doesn't sound like a lot, and everybody wants to make all the money instead of some of the money, but $300 a day is a $1,500 week and a $6,000 month. Guys, that's a $72,000 year at only $150 profit per contract. And I'm going to tell you right now, if you focus on the best of the best, that's a very realistic goal. And it's not a difficult to reach goal. The goal becomes more difficult to reach when you forget that sometimes there's nothing to do, that sometimes the advantages aren't present. So guys, this plan is designed to keep you focused, to optimize your chances of success with a 50-50, with that high probability. That area with the potential to break trade, there is a very, very specific set of directions to get into it. You're going to see them throughout the day. And the management is a little different because it's not a clear path. All of that's in the KISS plan, guys. All you have to do is practice it, to scroll back, to look at these trades, to burn them into recognition. And then I'm going to give you one more thing, and then we're going to take our first break because I do think breaks are important. This is something that I wrote this weekend, and I want to give you guys an idea about why I teach the way I teach and the method and the super simple KISS plan. And the key to all of this, to becoming a great day trader, is having a solid foundation, guys, and understanding the basics. And then each day, each week, just taking those basics and compounding a little bit. So for the new users, I blanket you with very, very conservative rules, very focused rules, recognition of advantages, and a solid plan that optimizes your chances of success as you learn to read the indicators. So for the brand new users, it sounds like I'm telling you all termination conditions are bad. No momentum is horrible. Areas beyond the large triggers are bad. And this is that blanket rule designed to give you repetition as you learn to read the indicators, to give you the best chance of success. They're not always bad, but until you have the experience to know when to use the exceptions, it's safer that way. And confidence comes from the memory of success. And then just like anything, the more time you spend with it, the more you will see, guys. And this is where the doors begin to open when you build that foundation, when you learn to read your indicators. So don't be in a hurry. Like focus. Say, I'm going to be the best chart reader ever because I know that that's going to open the doors. And one of the biggest challenges for the new users when you see older, more experienced traders taking trades that don't fit the rules. It creates a little confusion for you guys. Everybody wants to be the trade police. But he traded into a termination, but he didn't have the best momentum. But that doesn't even have a pullback to an area. And why do they do it? Well, they're doing it because they have the reps. They have the chart reading behind them to recognize advantages in the moment and to be able to weigh out whether or not that's an acceptable trade for their plan. So don't focus so much on the trades that other people are doing. Like Ron's trades will terrify you in the beginning because they're not high probability. Don't be the police. Focus on having the advantages, and then you start to grow. And then because you watch these patterns, because you got this chart reading down, with a little less than perfect momentum, you start finding yourself taking these trades. And maybe without a completely clear path, you find yourself taking opportunities and being able to manage out with profits. And you become a little less rigid. But in the beginning, keep it very structured, keep it very focused. And learn the process that yields the results, and the results typically seem to follow, guys, and that's where the KISS plan comes in. If you keep it basic, if you follow simple rules, and you're okay not keeping up with the Joneses, you can find an extraordinary level of success. I've had people get funded in their first 30 days with Nexgen just through keeping it simple. And I've watched this happen over the years, over and over. And the further you new users deviate from simplicity, the more difficult it becomes, the longer it takes to learn these patterns. And Abdulaziz, this is such an important lesson, but it's one that we all have to go through at our own pace. So I say it and I try to remind you, but if any of you have kids, tell them not to do something. Don't touch that hot stove. Every kid's going to touch that hot stove. If you've ever eaten in a Mexican restaurant, they set down your plate. Don't touch the plate, it's hot. All of us touch the damn plate, right? Because we got to know for ourselves. But I'm telling you through experience, guys, the further you deviate from simplicity, the longer your learning curve goes. So keep questioning everything. If you have a question, don't hold back. I encourage it. I want you to learn, but give yourself a little grace, guys. You're new. It's okay to be. So I wanted to drop that in the room, and I wrote that up, and I think that it's such an important part of the journey is realizing that you are on a journey. And I'll even drop this in there. Read it every now and then. Remind yourself. But what this does, guys, is it reminds you that you're new and it's okay to be new. And what you're doing is you're building this outstanding foundation that's going to take you to where you want to be. But the reality is all of us were probably great in our careers. All of us were probably at the top of our game. And it took us decades to get there. But we believe that in trading, we should be profitable within the first week. And if we're not, there must be a flaw in the system. The only thing that I can't provide you is experience, guys, but I can teach you how to get it. So that's our first hour and a half today, because I know I have new users. Are there any questions about the high probability trend trade? I know that it feels like it's a lot in the beginning. It's a lot to take in on day one. Understand that it does get easier each and every day. This is a fantastic community, and this community really does look out for each other and shares ideas and gets in. And then, guys, this is crude oil. 3 divergences in the same price range, right? Termination, caught between areas. Rules 1 and 2 never met, and none of you guys ever had to take a trade here. From resistance to support, you're watching a market consolidate. Your rules are keeping you safe. Guys, it's either going to go up or down. You just don't know yet. How many times have you guys that have traded in the past given it all away when it kept reversing out of nowhere? Your rules are designed to keep you safe. It's such an important part of what we do. And then this is for Ron, guys. This is Norbert, ladies and gentlemen. Know your place in the market. We don't move the market. We don't create trends. We don't create momentum. We don't react to areas. We let these guys with deep pockets do it. There it is. And guys, play the role of the remora. Learn how to wait for them to establish direction and momentum. Wait for them to not be near their decision-making points. And then you guys will be able to jump in and you'll be able to capitalize and you'll do just fine. And then Farouk, we're going to get into that feedback. I'm going to take a quick break. When I come back in 5 minutes, I'm going to start clicking on all the charts. And just before we get into it, I haven't looked at your picture. Guys, I want to show you how to get the best feedback. And this is very, very important to me that you do this. Tell me why you did what you did. I prefer, if you're following rules, write your rules on the chart, because then we can discuss whether or not you're adhering to them. But tell me why you did what you did. The new users don't know the rules yet. So maybe it was green and I went long, or it was red and I went short. But if you always tell me what you did and there are no wrong answers, we can walk through together and make sure that your chart reading was where it needed to be. Show me where you entered. Show me on the small chart where you took that entry. Circle it, draw an arrow to it, whatever. Tell me why you did it. The best answer is I had an area inside of favorable large triggers if it's a high probability trend trade. Or I waited for the areas to clear and this was my cleared spot. That's why I got into this momentum style trade. Tell me where you got in. Guys, and again, we'll work together. If there's a better, lower risk, higher profit kind of entry, we'll find it. And then show me where you got out, because every great trade creates a management opportunity. And in the beginning, we're going for quick profits. But ultimately, guys, you're going to find that those $300 trades can turn into $1,000 trades pretty quick if you just understand where the market is likely to go. So if you'll do me a favor and make sure that you guys have this on every chart, it gives me the ability to give you the absolute best feedback. And then when I come back, I'm going to take this quick break. When I get back, we'll start looking at your charts. We'll watch the live market. Guys, lecture time is over. We are going into discussion mode. So I'll be back in 5 minutes and we'll start looking at these. Go stretch your legs, guys. let's get back at it. So I'm going to scroll up to the top. I just want you guys to see what I do is I have to scroll up to the very top. That's how I get to your pictures. There haven't been a lot of pictures posted, but I'm going to go through it. And every time I talk about a picture, every time I look at one of your charts, guys, I am going to talk about advantages. I'm going to look at what was good, maybe what wasn't so good, and we're just going to work together to get to where we need to be. Let's see. First one was Ron's. And I want you to see how plans come together that may not be high probability trend trades, guys. And he put it very clearly on his large chart. Price clears trouble. Price gets beyond the areas that we're having problems with. His small chart has strong trigs, plenty of momentum, lots of room. So he has devised a plan that has him taking little snippets just right in the middle. And that is 6 contracts, guys. That's a little over $1,100. It's not a high probability trend trade, but it's an outstanding use of momentum. It's an outstanding use of a clear path. And then taking your ability to read charts and turning it into profits, turning it into your trade, your best of the best, what it is that you want to look for. And then Cav comes through. Cav says he has strong triggers. Everything's going up. He took a limit order on a little pullback. See how that support is right there, right at those triggers. And what he did is he capitalized on the momentum, letting the area break and a little snap back to support inside of favorable large triggers. And this was a great look. And once again, it's relying on the idea that momentum leads the way, that momentum creates an advantage. And Cav, really well done. It's more of a momentum style trade, but it does fit the rules for a high probability trend trade. It's just a shorter pullback. And his ability, Cav's ability to read his charts gives him the opportunity to take these quick little snapbacks without the full pullbacks. And it's beautiful trading, and it's a great chart read. Nicely done. I think those might be the only 2 that were up there. And then Frock, let's see what you did. There's your termination. Oops. Make this a little bigger. There's that termination that creates a reversal. I like that. That's a great look. That's a great precursor to one of those higher probabilities. And then you say that this is the best place for entry. And you know what? I'm not sure that it was, Farad, because I want you to see a couple different things. Down here at 908, your large triggers were still down, right? And your small triggers were above, but they were pointed down too. And what you did with this entry was an absolutely amazing, a little bit of patience, say this looks good, but this is the best. And you take the quick little snapback, you try to take the momentum style. And I think this is what's outstanding is you didn't get stopped out. You just said, well, it may go back to support, and it did. And you just said, I'll just add on. Let's put 2 more on. Beautiful entry, strong triggers, no divergence. You take 3 of them off. And then, Farak, the only thing that I think I can say about that final contract is you exited just above support, right inside of triggers when you had odds favorable momentum over here. Does that make sense? I think the patience on the first one, there's nothing wrong with that. Oh, you're okay, Lyle. Appointments happen. And there will be a time where you probably take this one, but this was outstanding. And I think that this is a great example of how the market loves to pull back. It really, really does. That's a great shot at momentum. And when it didn't work, you kept your wits about you and your stops where they were appropriate. And I'll tell you what, from 83 and a quarter to 88 is a great run. That's an awesome first trade. You could shut it down, go play golf, and probably do all right if that's all you did once a day for the rest of your life. You're welcome. Really nicely done. And large chart led the way. Large chart had a termination that reversed it. Large chart had odds favorable, right? And that's that 50-50. The smalls are through, but the large are not. And the fact that you have strong triggers and no divergence sets you up for success. I mean, that's outstanding. David W., you said first trade of the day, maybe a little too eager. All right. So let's talk about it. Not a good bottom. I'm not sure what your orange 1-to-1s are. They may be a small swing 1-to-1 that you've turned orange instead of purple. Is that right, David? Cool. So, David, when I talk about my areas, when I'm talking about just those really key areas, the small swing 1-to-1s didn't make their way into the lineup. The large swing, the yellow 1-to-1s did for sure. Fibonacci support, all that good stuff. Those small swing 1-to-1s, man, they didn't make the list, and there's a reason, because they're based off of too many small fluctuations. If they line up with a key area, I believe it adds strength, but not really enough to be considered a good top or bottom because they didn't fall into that termination category. Does that make sense? And then, so what you ended up with, and I love it, beautiful momentum, right? Smalls are through, large are not. So these areas have the potential to break, but they haven't broken. And then there's that darn divergence. There's that loss of momentum when the path isn't clear. And it's not just the one path, it's actually two of them. Your entry is beautiful. Your stop placement makes sense. But you just gave away a little too much on that one. And if this were a good bottom, I completely understand why you took that. Because a great strong termination that creates a reversal, we might let one divergence go. But since it really wasn't, it was good. Yeah, no worries. It's awesome. Can we celebrate the most, I think, important thing on this one? Odds favorable. And Sam, I got you in 1 second. We'll go through it. Odds favorable, right? That leads the way. Look at the entry, though. Even though this one didn't quite fit the high probability, David has absolutely no qualms getting in at the best spot. And I think that's what pays dividends long term. So nice job. I love to celebrate a good entry. All right, so to take pictures, I want you to go to your search bar, Seb, and I want you to type in TechSmith. So TechSmith Capture is the tool that was downloaded when you downloaded your indicators. And this is for everybody, guys, not just Seb. And I'm going to do two things. The first thing I'm going to do is I'm going to drop this link in here just in case you need to revisit it later. But this is everything that you need about taking pictures and sharing in class. But when you open up Capture software, it looks like this. It's a giant red button that says Capture. Let me know when you're with me because we can walk through this together. If you just want to watch me, that's cool too. But taking these pictures is pretty easy. I'm going to click that giant red button that says Capture. Okay. Well, I'll give you a second. While you're doing that, and David, I think you also got caught in a market that was struggling a little bit with some consolidation, right? There is a huge fight going on here, and we don't know if that's going to happen or not. Look at that termination that reversed the market. That's kind of cool. All right, Sab, so I'm going to click Capture. If I hover over just one chart, it's going to let me take picture from just one chart. If I hover over my large chart, it's only going to capture my large chart. But since we trade two charts, I want you to go to the upper left-hand corner of your large chart and hold down your left mouse button. When you drag it all the way down to the bottom right, make sure that you get your timestamps in there because we're going to line stuff up. Make sure that you get your prices in there because we want to line up entry and large chart. And then when you release that mouse, it's going to give you that capture an image option. So click on the capture an image And now we're halfway there. The picture's there. And the cool thing is there's a million things that you can do with these pictures. They don't always have to be trades. Maybe this one's going to be a lesson in termination conditions. Price reached an area, none of the triggers broke. And you can literally do this, right? Go through and circle all these. And then left click and drag and create a call out box. See that call out box? This is how we're going to talk. You could put, hey, Mark, I have these all down as termination conditions. Am I reading it correctly? And then what we do is that opens the door for us to go through, to go back to the resource material, whatever we need to do. So that's one way you can use this, is perfect. So you got one chart. So I want you to try the click and drag and get 2 charts. The next thing is maybe you took an entry right here, right? So because I have your large chart and I have your small chart, you can say, but Mark, I took an entry, right, an area inside of favorable large triggers. How come this one failed? And then that opens the door for us to talk about termination conditions and rule number 2 being met. But one of the things that I want you guys to do is use that call out. Really type why I'm doing what I'm doing, why my entries are where they are, and it makes it easier. And then once you vandalize your chart, guys, click copy. And Sab, you did a great job of that. And then just drop it in the room. But don't omit that super important step of telling me why you did, giving me both charts, going through it. Because if all you do is give me a small chart, I can't even see prices, and it's huge, and I'm not sure what's what, right? It's not as easy to give you any sort of feedback on it. And the idea is that these pictures are for feedback. The pictures are part of the growth process. So if you want to try a 2-chart run, give it a shot and get it up there, and maybe steal this picture to do it. Try writing on the chart, try circling some things. So when you click capture, go to the top of your large chart. See how the crosshairs are just above it? And hold down your left mouse button. So click your left mouse and then drag it. It's a click and drag tool. Drag it all the way down to the bottom right and then release. And then once you release at the bottom right, it'll let you take that picture. If all I do is just click capture, let me do it real quick, and hover over one chart, and you don't have 2 charts up? Oh, well, there's part of the challenge. Did you close out your large chart? Did you accidentally X out of it? No worries. So do this. And this is 7, but it'll be the same in 8. Go to your workspaces and go to close the workspace. And it's going to ask you, do you want to save it? Click no. And just go ahead and close it out and click no. And then what that's going to do for you is, here, I'll show you the whole process. If I accidentally close out a chart, like it's gone, I just killed it. It's no longer there. If I close my workspace and I don't save it, when I open the workspace back up, then both charts come back up. It's pretty cool. And I've done that a million times where I've accidentally closed out a chart. And you just hit close and don't save, and it'll bring it back up like before you did it. But you definitely want both charts. Yeah, we've all done that. Everything that I teach, oh, it was below it, right on. So drop them side by side so that you can get that picture of both. And guys, these are the things that I will stop class dead in its tracks for, because I don't think there's anything more important than posting in the room and asking questions. I don't think there's anything more important to your education than taking these pictures and putting them into your spreadsheet and studying them every day, and making sure that you're creating um, that repetition. And then once again, 50-50 with divergence, right? Ooh, but let's talk about this one, David. Hold on. Let's talk about favorable large triggers. So a couple things that we notice, right? You have a termination that's creating a full reversal. David, I love it. You have odds favorable momentum. I love that you put 50-50, but you also put clear path. It can't be both. Does that make sense? It can't be a clear path if it's a 50-50 because a 50-50 means that the area is not broken. And I think that that's such an important part. And this isn't only for you, David. You gave me a great opportunity to create a lesson in the classroom. When you know that there's a challenge, when you know that there's a problem, when you know that one of your advantages is gone, what it does is it puts that management hat on. It makes you start thinking, well, this isn't the perfect trade, so I'm going to have to make sure a couple things are right. In this case, we don't have the clear path. So if we go to the smaller, faster chart, you do get one divergence, right? But you're saying that's okay because I'm coming from a termination that creates a full reversal. I'm willing to take a shot at this 50-50 trade with one divergence. Am I with it so far? And then guys, if you're on the KISS plan 100%, it says no divergence on the 5-1. There's a reason. It also says divergence, no trade. There's a reason. And under management, if divergence prints exit trade, there's a reason. Because divergence can kill one of these 50-50 trades pretty quick. But David's been around long enough to know that when a termination creates the full reversal, he's willing to take a shot at it. But David, here's where the challenge comes in. That is from the top of your triggers to the bottom of your triggers right there, right? So we've drawn that first box. And then your window of opportunity, you have it drawn as a midband. But your window of opportunity, David, goes from this Fibonacci support all the way down to these 1-to-1s inside of those synthetics. The trigger split, and what it did is it just really exasperated the size of your potential bounce place. Does that make sense? Well, it's a big area, and it's not necessarily a deal breaker, but let's talk about this real quick. Look at where your stop is. Your stop is inside of your window of opportunity. It's just above that lowest point of support. Which means that instead of putting your stop where the market shouldn't go, you put it exactly where the market was likely to bounce. And that was 830. So there's your 50-50. I just want to see what it looked like at 830. Because it did bounce up off the triggers. And look at that, David. It came right off of those 1-to-1s, didn't it? Son of a gun. But that is such an outstanding lesson. When those triggers begin to split, I hope you guys see it, your window of opportunity grows. And David, we've all done it, man. We've all done it. But you got stopped out right where the market was likely to continue. Does that make sense? Does that help a little bit? And guys, that's something that's happened so many times, not only to myself, but everyone in here. If you look at on your spreadsheet, no exits where entry should be, don't put a stop right at an area inside of favorable large triggers when your large chart says up. David, great picture, man. I don't even know that you were too eager on that one. It was a good look. You just forgot your rule number 3 entry rules a little bit. And David, one of the cool things is, and let's just, because there's not a lot of pictures, let's turn this into another lesson. So if divergence prints, right? So one of the reasons that we get in at the top of the window, one of the reasons that we get in closest to that pivot is because your large chart has odds favorable momentum and a clear path. And that's such a key to what we're talking about here, is odds favorable momentum and a clear path. But if the path isn't clear, what does that mean? And let's just think about it in terms. What does it mean if the path isn't clear? It means that we are hovering right at a decision-making point, right at a decision-making point. Does that make sense? It means we haven't gotten to the other side of it. So there could be room for a little bit of turbulence there. This loss of momentum right at a decision-making point, it may push a little lower. That loss of momentum might drop us down to the bottom, and you almost have to start to be ready for it. And there are traders that trade Nexgen that I know that if they have one of these 50-50 looks, they'll only enter at the bottom of the window if divergence prints. And I'm not saying that that's a good rule, but David, the one thing that you could have done is, do you see those small triggers absolutely flying against the trade? It is so hard to fight those small triggers and win on the NASDAQ. And that's kind of what you did. But let's go back and look at 8:30. And this is one of the things that you'll see on the spreadsheet. There's your first close on the correct side of those small triggers. It keeps you patient when they're fighting. And then if you're not convinced right here at the area, you can get in on the correct side. Stop's already established, risk is already established, and then you can take it up until things kind of go sideways a little bit. And that's one of the things for you guys that are trading NASDAQ is small triggers kill trades. Because, David, on the... Well, they can be above the large triggers. That's wonderful. Because it means that they're strong, right? But what you'll find, David, is when those small triggers break below the reversal bar marker, when they are less than a full bar away, the likelihood of them acting as resistance goes up exponentially. And let me see if I can find another picture for it. So like this one says, the smalls told you to wait. And you'll see these bounces fighting off of the triggers. Let me see if I can find a better example. This looks exactly like your trade. Everything looks awesome, right? And there's strong triggers at the time of the pullback, but when you reach the area for entry, look at how close the smalls are. It tells you, just hold off a second. You can see how they worked as resistance twice. And then once you get to the right side, because the large chart says go, it's a little bit easier. So it's not necessarily that the smalls are outside of the large. This one says smalls win again. Look how they act as resistance. Does that make sense, David? This is just a little nuance. And then here's the other side of it. That's not it. Sorry, I clicked the wrong picture. Smalls full bar away. So everything says down. When you pull back to the area, if you have room for a full bar back to the smalls, that's when I'm getting in at the area. That's when I'm like, man, if nothing else, if the smalls act as resistance, I've already got an established risk. I'm already in a good spot. And it takes a little timing to get good at that. Because when you get into the NASDAQ moves fast, right? But there's a good idea. As it pulled back, see how the small triggers were a full bar away? And it closes that gap, goes up, gives you a management opportunity. And then when it pushes back again, there's your close on the correct side, letting you know, all right, I'm on the right side of things, and off it goes. That's Pretty awesome, though. And I'm going to tell you right now, David, I blew out about 9 or 10 Apex accounts learning that rule. So I'm always happy to share it. Sab, I thought I saw you post another chart. Did you not? Try not to blow this one. And it's a little safeguard. And guys, this is for the NASDAQ. This is a NASDAQ thing. Look at this. If I circle the tail, right at support, right at the triggers. Once again. That's not a crude oil nuance. That's not an S&P nuance. That's a NASDAQ thing, David. And then when price reaches resistance and absolutely no trigger lines break through, you're into a termination. But guys, do you see how there was an opportunity to get paid? Termination, reversal. Some people, that was their first shot with the momentum and everything above. And it's the same lesson, David. There's your close on the correct side of the small when you can't figure out which one it's going to actually roll from. And look at that one. That's your whole day right there, brother. It's just a matter of getting good at it. It's a matter of getting the repetition. Guys, you've got the greatest software known to man. I firmly believe that. I stand behind that comment. You've got the most high-tech elliptical that was ever created. But if you don't learn how to turn it on, how to set the resistance, how to adjust the incline, guys, you're not going to get the results that you're looking for. You know, just because you buy the most expensive hammer doesn't mean that you can build a house. You got to learn how to swing it. That's what this classroom is designed for, guys. That's what posting pictures in the room is designed for, is every time you take a swing, we talk about it. How can we do it better? Because for us, it is fast, brother. Let me see. NASDAQ trades 5 or 6 times faster, I would say, at least, than the S&P or crude oil. And the reality is that most people can't analyze a chart that fast. Let me build one real quick and let's see what it looks like. I'm going to build a 5-1 and put it next to a 13-2, like our normal setup is for crude oil or the S&P. And let's see how fast this thing moves. And I haven't met anybody that's capable yet of trading it. And then that's perfect. Why is that the perfect entry? Because it was a pullback to resistance inside of favorable large triggers when you have odds favorable momentum and the potential to break. Don't forget to talk about these too, but man, perfect. Sab, you're there, brother. You're trading with direction. You're trading with momentum. It has the potential to break. It hasn't broken yet. But if you snag that entry right at the mid-band, it gave you time to manage back to the trouble spot. Come on. 5-1. There's a lot of data in there. We'll see if it comes up. You guys, this is one of those things too, is we don't have to just look at high probability trend trades. I created this template for you guys. I'll give it to you right now. So as you develop your plan, right, as you say, I like the high probability trend trade, but I've learned how to read my indicators and I want to create a momentum style trade. I want to look for a high volume area trade. I want to go counter trend trade, right? Guys, define your entry. Go through the exact same process that you went through for the high probability trend trade. What's it going to take to get you in, right? Create a checklist. Let your rules be simple. Let them be concrete. And here's the biggest thing. 10 pictures of your perfect long entries. All the time, I get people saying, well, Mark, I'm working on the HVA trade. And I said, cool, show me 10 pictures of your high volume area trade where you scroll back till the rules were met so that you could take a picture, so that you could put it into your spreadsheet, so that you knew with absolutely no question exactly what your perfect long looks like. And they're like, well, I haven't done that. Well, how are you going to commit it to memory if you don't know what it looks like. So this one right here, guys, this is designed to help you build a plan. And if you're building a plan, here's kind of one of the cool things. Send me your plan and say, hey, Mark, this is what I'm working on. This is what it looks like. Hold me accountable. Help me refine it. Help me pinpoint. Help me get a better entry. Help me take a better exit, right? And you can go through and do that. And why is this not loading? All right. It won't even let me load a 5-1. And I hemorrhaged my NinjaTrader trying to. Uh-oh. We may have to rebuild real quick, guys. I apologize. You know what? We'll use this as an opportunity for everyone to stretch their legs. But my NinjaTrader is choking on the NASDAQ. That's how much data there is there. Almost there. All right, I'm going to shut down my NinjaTrader and bring it right back up real quick. So guys, we've got an hour left in the day. Nobody appears to be posting pictures. That's okay. That's on you guys. Doesn't bother me. But what I'm going to do is I'm going to take 5 minutes. I'm going to stretch my leg, roll my neck, breathe through my eyelids, all that good stuff. David says, I'll see you're not trading pictures. So David, termination, full reversal, not a clear path, right? There has to be truth in advertising, David. You're drawing a clear path down to here. We're talking about this all the way back here. So this goes back to that idea. How come David took a trade into support? How come David gets to break rule number 2? Why does David get to have a rules-breaking trade and get paid for it? Does everyone see where he broke rule number 2? David, you wrote clear path. There's nothing clear about the path, right? No, I don't think you did. I don't think you did at all. David, this is what happens when you learn how to read your indicators. This is what happens, more importantly, when you begin to recognize patterns. So David, if you have resistance and a pivot stop out and resistance, and your large triggers never even come close to getting to it, right? This is an awesome top. This is a beautiful top that gives a full reversal, that gives you the absolute best look of momentum ever. Does everybody see that? We're not past rule number 1 yet. David has a termination condition that created a full reversal. The full reversal gives the best look for momentum that we could ever hope for. So as David comes into this area right here, as David comes into this fib, David says, because of this good top, maybe David didn't say this, but David, you might next time, because of this amazing termination condition, because of this level of momentum, because of these strong triggers, I'm willing to take one shot from the best of the best area, going with that momentum, because guys, that's your decision-making point. That's where the buyers lost and the sellers took over. And you know it because there's a big, thick red line, because all the triggers are below. Because that basic idea, the determination that creates a full reversal, creates a huge advantage. David, your jumping point, your starting point is the best. The momentum is insane. The entry is perfect, and you managed coming right back into your potential trouble spot. And when it broke, you said, let's go to the next one with all that momentum. I think this trade is brilliant, and I don't know that you got lucky. I think you had more advantages than disadvantages. I think your entry allowed it to be very low-risk attempt at it. And I think you were aware of that, which is why you managed out at the first trouble spot. Sound about right? And if this wasn't your thought process, the cool thing is that it can be next time, and maybe you just added a trade. But what was the beginning? The beginning was the good top. The beginning was that great termination that created a reversal. Well, and you were looking beyond the entry area, right? You were looking beyond the trouble to the next area. I think it's awesome. But you always have to look at the now a little bit. But when a great top creates the reversal, guys, it creates advantages. And this is where you start to recognize that areas break with that odds favorable when they come from a great termination condition. Nicely done. All right, I'm going to try and build a 5-1 again real quick. Let's see if it'll work this time. And you know what I did is I had it 90 days back or 30 days back, and that was my fault. So I'm going to make it a little bit smaller because, Farak, I want you to see this. I really want everyone to see this because I think it kind of shows what a different animal that the NASDAQ can be. So we'll let that come up real quick. Guys, when we come into the second or the final hour, maybe you have notes on a piece of paper that say, hey, this is kind of a sticky point for me, or man, this is something that I want to be a little bit better at, and I'm not sure. Let me ask Mark. And drop it in the room. Ask that question. All right, so there's our 13.2. Get over there. Does anyone know how to turn that feature off in Windows? And then there's a 5-1. And watch, it'll look perfect, right? But on the 13.2, there is a basic trend trade right about there. And look at how ugly it is on the 5-1 Farak. On a 5-1 chart, it doesn't even make sense because the NASDAQ tends to push and run and stuff. And when the two come together, what may be a really good looking trade on the 13.2, on the 5-1, it's just ugly. It's from beyond. So that's kind of one of the biggest reasons, aside from just how fast it'll move, is it just sets up smoother on that higher time frame. There's so much volume and so much going into these trades, so much movement in the market that it literally just flows better with the higher time frames. All right. So what did we have here? Termination, full reversal, odds favorable. That's a big window of opportunity, isn't it? But it did bounce from the top, but it may come back. What do we see in crude? Area breaks, pulls back, area breaks, pulls back into the next area. Not a good looking entry. So much. And the NASDAQ is just kind of in a holding pattern right now. All right, I'm going to leave you guys. I'll leave you with the S&P. I'm going to go stretch my legs again real quick. When I come back, I want you guys to drive the rest of the class. So let me know what we're talking about. Let me know what we're looking for. Show me pictures of your perfect entries. Go to your spreadsheet and show me. Just pull a picture off and go, hey, Mark, look, this one's in my spreadsheet. What do you think? I'll see you guys in just a minute. and giggles. Can anyone tell me what happened on the small chart that could be detrimental to the move up? Anybody? Anybody recognize it? Maybe if I tighten it up a little bit. 3 divergences, right? 3 divergences. Is it guaranteed to kill it? No, but isn't it a giant red flag that begins to take away that advantage? And you start saying to yourself, man, with the split triggers and a giant window of opportunity and 3 divergences in the same place, maybe I'll wait just a second. Maybe I'll just kick back and wait and see, because my money's worth it. My money is worth having the best of the best. And guys, 90% of your day is doing nothing. 90% of your day. And a lot of people are getting caught up going, oh, look at the fluctuations. It's going up. It's going down. I'm scared. I'm not. I don't know. Working on the trust issue. It made it to the one-to-ones, huh? And C-Dub, this is a great example of, and I love that you're on sin for this, but letting the small chart talk you out of it, right? Nothing changed. You had the best looking momentum. You had the potential to break. You had no divergence and strong triggers and a perfect entry with almost no risk. Notice that the small triggers are a full bar away when you hit the area. David W., do you see it as well? C-Dub, that's a rock star NASDAQ entry. And then from this, where's your first problem area? That red line? So you adjust from 68 to 71, puts an extra 60 per contract in there. That's pretty good, right? And then what changed when you got there? That's the management side. And you're working on trust. And C-Dub, that takes longer than most people want it to. You have to ask yourself, why did I get into the trade? Well, I got into the trade because the large chart said that it was likely to go up, and the large chart said that it had tons of momentum. And it's these little fluctuations on the small chart that will absolutely drive you nuts. Absolutely drive you nuts. Because right here, right at 66.75, you moved your stop to the second to +4. So how did you come up with that number +4? That's just all you're willing to get back? Fear? That's a good answer. So let's do this then. If you were willing to take this trade right here under these conditions, would you have been willing to take it right there at 63.75? And this is an easy exercise to do after the fact. Because in the moment, your heart's going so fast, you get blind in your left eye and can't hear anything, and everything's ringing, right? But that was freaking rad. Isn't that the same level of rad? Isn't that the same level of awesome? Maybe even better, because now the small triggers are even further beyond the area, right? It does. Fear does create hesitation. And I do this, C-Dub. First of all, just nothing but kudos, man. Rock star getting paid on this one, right? And if that red line scares you, just take everything off at the red line. That's okay. But the key to management, guys, is really asking yourself, what changed? Are my rules still met? So C-Dub, if this pulled back to support inside of favorable large triggers with this look, isn't that just another trade? And I love this because I am so guilty of this. So what you'll do is you'll get to the point to where you'll say, here's the deal. I'm in. I got paid on one. I still have one on. And what did you make? From 64 to 68. So you're up $100 on the first one, right? Put $80 on it, right? Be willing to give some back to go with the large. And, you know, this is one of the things my brother and I always talk about it. is I love the $100 target. I'm a huge fan of the $100 target, and I can read my charts just fine. Because what it does is if I take one off at 100 or two off at 100, that's in the bank. They can't take it. And then if my appropriate stop is still $60 worth of risk, then there's absolutely nothing that can go wrong with this trade for me ever. I can't come out negative no matter what. I mean, unless I get slipped, which is, it's rare. And you'll get to this management point where you trust this so much that you say, there is no way on God's green earth I'm getting out anywhere in this area right here. How do I take some profit and stay in the same trade? I'll have different profit targets, Cav. So I'll do this. And let's just see. So if I take a 2 lot, right? ES2 lot, and I get into the market, my first profit target is right here at this divergence high, right at that trouble spot, right? So if my first target gets hit, let's see if they'll give us one more tick for it. This is how you stop the market in its tracks. Well, 3 divergences will do it too. Target filled. So my first target, I got $50 in the bank. It's mine. And now, I don't know, maybe I go break even, right? I mean, break even doesn't make any sense. But I've already got 50, so if I have one tick of risk, I can never lose. The worst they're going to do is take $25 from me. Does that make sense, everybody? And the cool thing is, and you'll get to the point where you do this, C-Dub, is you take your first profits, right? And then when it pulls back to this area, instead of getting out, you just put that other contract back on. You're like, holy shit, everything is still wonderful. I'm going to put it back on. So you get paid twice in the same range, right? Target filled. So it's kind of cool that you can do that. It's kind of cool that you can get into the market. Oh my gosh, and I have an example where Debbie did it. I've stolen so many pictures from so many people. Trading goals per Debbie W. But if you look at it, she enters on the pullback and never exits, and enters again on the pullback and never exits, and enters again on the pullback because the large chart kept saying down. And then she finally gets paid down at the trouble spot. And what some people will do is they'll enter and they'll go, you know what, I'll take half off here, but I'll put them back on here. And then I'll take half off here and I'll put them back on here. And you're double dipping on the way down. I'm going to tell you right now, guys, it feels really cool when you do that. Because it's the little fluctuations on the small chart that create all of these just rock star advantages on the large chart. What to do? Do you have odds favorable momentum? No. Do you have a clear path? Yeah. Do you have an area inside of favorable large triggers? No. C-Dub, is it okay to do nothing when your rules aren't met? And this is what happens. But you had a clear path, but you didn't have momentum, right? So let's read it. 1 divergence, 2 divergence, large triggers are down, synthetic triggers are up. Not great momentum. Oh, there's another divergence right there. 1, 2, 3 divergences in the same price range. But I'm not going short into support, right, C-Dub? That feels like financial suicide. And then sure enough, divergence is pushing it down. But look at the answer. Is there still any indication that support's going to give up the fight there? Like if you go just to rule number 2, and I think that this is such a big reason that don't let the small chart talk you into trades. Let's take a picture of the picture. And this is one of those things, and it pisses my brother off because I'll send him this picture every now and then. So is this your best look for short trades? What do you guys think? Is this the best of the best to get you into a short position? with all of my triggers above support? Probably not, right? Does everybody see how that's not a good short? Is it pretty comfortable to say, yeah, that's not a short trade. All my triggers are above support. But the flip side of that is that your best look for longs with a red background with the small triggers down? So if it's not my best look for longs, but it's not my best look for shorts, the hardest thing you'll ever do is nothing. And this is why I like you guys to talk to yourself in terms of advantages. So let's go back to the live market real quick and just see what's going on with it. I'm using the large chart. Is this my best look for longs? What do you guys think? I say hell yeah. I say that's the best look for longs ever, isn't it? Termination, full reversal, odds favorable, everything is screaming. So this is where you start to fudge a little bit. This is where you say, man, I see that they're printing divergences. Let me get to a point. Let me get on the right side of everything and maybe I take a shot at it, right? This is where rules get broken, guys. When you learn your rules well enough, when you've seen these patterns enough, and you can do it even more. Watch this. If I go on the large chart, look at those trigger lines. Even more to build trust on the large chart, guys. Look at that momentum on the large chart. The small chart, those little yahoos, yeah, they created some fluctuation. They most certainly did. And the reality is, and my bad for not recognizing this in the moment, do you see how both the small and the large got above that divergence line? Guys, this is a huge lesson. Let me make this magenta or violet. Do you see how small and large got above that magenta? Guys, this is huge when you're determining those three divergences. Quick glance, I didn't see it. But if small and large above an area mean that the area is broken, doesn't that mean that this is only two divergences? Because that one doesn't count anymore. Which just adds a little more giddy up to the idea that this market is in fact going up. It's kind of neat how you're going to do this, guys. You're going to start off walking. That's it. Whoops. You're going to start off looking for very black and white. These are my advantages. I either have momentum to clear path in an entry area or I don't have a trade. Let it be that way. It's okay to be that way. And then you're going to say, well, this isn't the best momentum, but I do have a clear path and I have a perfect entry area. And then if you look at C-Dub's picture, he didn't have the best momentum, but he did have a clear path. So he's asking himself, do I have the best entry for a long? Not at all, right? It's all red. The large triggers are down. That's not a good look. That's not the best of the best entry. So C-Dub said, it's just not enough, right? 1 out of 3 isn't enough. And guys, this is what you'll do, but you'll get to the point you're like, okay, I don't have the best momentum, but I did have a clear path and I did have the perfect entry. So maybe I'll manage assertively. I'll still take this trade understanding that there's a challenge and I'll manage it a little quicker and I'll take profits a little quicker and I won't hold on for dear life. And that's kind of where you're at in this process. When you begin to speak to yourself in terms of advantages, you begin to really embrace the idea that the only reason to ever get into trade as a new user is because 3 are present. And then when one of those go away, your 50-50 trade gets rid of the clear path. And that's why you insist on momentum, why there shouldn't be any divergence on the small chart, and why you look for that smaller entry area, right? That tighter risk, because you don't have a clear path. So why on earth are you going to put a full risk trade on into a lower probability trade? And this is part of the growth process, guys, and this happens every day. Every day you're going to get a little bit closer. Every day you're going to see things a little clearer. And every day you're going to get to the point to where you start fudging your rules a little bit, right? What is it? Learn your rules like a scholar so that you can break them like an artist, I think is the phrase. And the easiest way to do that is to post your trades in the class to get feedback. Mark, this is what I see. This is what I did. Is there anything we can do to do it better? And then using the spreadsheet, guys, every morning you've got to study what you did yesterday. You would be surprised. You would be floored at how much people that want to make $1 million a year as a day trader don't want to do any work to get there. Hey, Conrad, happy New Year. You would be absolutely floored at how little effort people will put into becoming successful as traders. Guys, every morning you should be studying those trades. Every morning you should be asking yourself what worked, what didn't work, what made me comfortable, what felt easy, what was forced. And what you're doing is you're identifying patterns in the market that are bringing you success. But more importantly, you're identifying the patterns that aren't bringing you success. And I'm telling you right now, if you drop that bad boy in the room more than once, I'm going to start to recognize the patterns in you that aren't bringing you success, and we'll talk about them. Everybody has a thing, guys. Some of you trade in determination conditions. Some of you hate momentum. Some of you go counter trend. We'll identify it. We'll work together to get through it. We'll get you where you want to be. But you got to post in the room. You got to give me that great information. You got to use a spreadsheet, guys. I'm telling you, this plan has been proven over and over and over. And since nobody's posting pictures, guys, I'm just kind of going through things that I think are helpful. To minimize your learning curve, post pictures of your trades in the class, every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? You can't be expected to. So you need feedback. You need feedback from me, from John, from whomever, to make sure that you're taken care of, that you're not placing the wrong trades, that you're not getting lucky, that you're not setting up for long-term failure. And that really is the magic of this classroom, guys. Every picture comes with a free private session. And the more you put on the picture, the more opportunity there is for private sessions, right? The more opportunity for feedback that there is. So embrace the path. And you guys want to know what the coolest thing is? And I certainly don't mind sharing this with you guys. When I started trading, when I got my introduction to Nexgen, for those of you that don't know, my brother's the CEO. My brother wrote the software. And he told me very simply, he didn't even show me this picture. He said, Mark, I want you to do me a favor. He goes, here's the rules. Market replay is huge, C-Dub, because you can pause and check your rules. But my brother said, hey, here's the rules. All right, this is what it should take to get you into the market. So I want you to do me a favor, Mark. I want you to write the rules down. And I want you to go find 10 pictures of your perfect long, and I want you to go find 10 pictures of your perfect short. He goes, this is the first thing that I need you to do. I need you to just study so that you can recognize it. To which I lovingly replied, screw you, John. What do you know? My last name is Novak. I'll be just fine. And he said, dude, so once you take these pictures, every time you take a trade, I want you to put it into your spreadsheet. I want you to really burn these into your memory so that you don't miss them. To which I replied, sorry, John Novak, that feels like a lot of work. I don't want to do a lot of work. I just want to be rich. And then he told me, Mark, participate in class. I teach the room every day. Guys, this room was taught by John Novak for a long time. He goes, I can't keep giving you private sessions via Skype, so every time you take a trade, I need you to post it in the room. And guys, I was mortified because I took way more losers than winners, because I didn't know why I was getting into the market, because I refused to write rules, because I didn't take pictures, and I never asked for help. My brother wrote the freaking software, and I never asked for help. Well, 30 days in, I was convinced that I was brilliant because I'd gotten lucky on Simulator. And on that 31st day when I went live, and it's not like it is now with Apex where it only costs you $50 to blow out 2,500 or 50 grand or whatever. I lost 5 grand in 21 trades straight, not one winner in 21 trades. And I had absolutely no idea why I'd lost. All I knew is that my brother sucked and Nexgen was a crock and it was snake oil and he's going to end up on Dateline and it's going to be horrible. And I was like, ugh. And then I thought back and I thought, well, he told me that I need to take pictures, that I need to write rules, that I need to participate. And he tried his hardest to get me to do this path, guys, and I fought it tooth and nail. But then I embraced it, and this was a $5,000 lesson for me, guys. Most of you can damn near buy software for what I lost in one day of trading. And I started using the spreadsheet, guys, and I took this spreadsheet, and at the time, this page went to 279. And I filled it out 5 times over with my simulated trades, with my market replay, CDEB, same thing. And I filled it out over 1,000 pictures, guys, before I ever went live again. And I started using the spreadsheet and taking those pictures and burning them into my memory. And I knew exactly what it was going to take, and I knew exactly what it looked like. But the most important thing is that I started posting in the room, and I started getting feedback from John Novak. And guys, my biggest challenge was trading in determination conditions. And I still remember the day I posted in the room and my brother literally said in front of 100 other people, Mark, when are you going to stop trading into these lines expecting them to break? And those were his exact words, and I still hear them as clear as day. So what I started doing is before every trade is I took a picture. Literally before I pulled the trigger, I took a picture and I started looking at it. Is it a termination condition? Because what I'd done is I'd identified through help in the room what didn't work, and I eliminated it. And then my other problem, when I finally stopped trading into fibs, is I tried to time out this super hard gap theory, when the market's likely to snap back to large triggers. And I took a million losers because I was fighting momentum, because I was fighting direction. And I was convinced, my opinion convinced me that the market should go up despite everything saying down. And then my brother wrote me a book and he said, Mark, let me help you. How to commit financial suicide. One easy step. He goes, trading against strong triggers. He goes, Mark, just don't do it. Just don't trade against strong triggers. He goes, it's going to fix a lot of things. And don't trade in determination conditions. And it's funny because he says it, right? Hey, Mark, don't do this. And I still did it for another 6 months, guys. And I screwed up and I've blown out all sorts of accounts. But then eventually you start to catch a groove, right? You start to see what works well for you. You start to feel comfortable with a certain trade setup. You start to really get into this idea that I can win more than I lose if I just focus on the process instead of trying to be a hero every time I trade. And guys, this was my path. Me jacking it up so bad is how I ended up teaching a 101 classroom in the afternoons. And then everything that I applied and learned got me to where my brother got the opportunity to go become a day trader, to use his software, because I took over this class. And it didn't happen overnight. And guys, I'm telling you right now, my first 30 days was spent making mistakes, and I never asked for help. And it took me so much longer to get to where I wanted to be. So that's really why I teach this class, is I want to share with you guys, it doesn't have to be that hard, but this is your normal curve. This is what you guys get when nobody posts pictures. I go soapbox. Everybody gets into Nexgen and it looks like fun, right? Man, this looks like fun. I'm going to be freaking rich and I'm going to buy a Ferrari and girls are going to want me and men are going to want to beat me and all those great things. And then you're like, whoa, this isn't as easy as I thought. I got to learn some stuff, right? And then you learn a few things and you stick to that KISS plan. And you're like, oh, look at this. I can do this. This is awesome. This is cool. But you didn't really learn anything. You're just using the checklist, which is awesome. That's what it's designed for. And you're like, I'm so awesome. I'm going to go live. This is where I went live. $5,000. That's where this came from, was after you lose Mark Novak, $5,000 will be out of your account. And you realize that you don't know shit. And then you go through this little dejected stage. And I want you guys to brace yourself for it. And it's this phenomenon So guys, in my previous life, I worked in the restaurant industry. And one of my favorite things to do and one of my gifts was I trained new managers, and they gave me all the managers to train. And every new manager that came to me, I gave a checklist. Whoops. And I said, if you just follow this checklist, you're going to be successful every day you're in this restaurant. Every day, just follow the checklist. It'll eliminate 100% of your mistakes. And every manager that I train, just like you guys, when I hand you this checklist, you absolutely crush it. And you're like, man, this is great. I'm winning 70, 80%. This is easy. It's effortless. Life is good. I don't even get sweaty palms anymore. And then this crazy phenomenon kicks in. And I call it the 30-day stupid. And forgive me if stupid is one of your trigger words and you find it offensive. But I call it the 30-day stupid. It's right about 30 days, guys. Right about 30 days, you abandon everything that brought you success. You try to add rules. You try to add trades. You try to get more. You add charts. You have 8 monitors when 2 is more than enough, right? And you're trying to look at everything and you're getting absolutely nothing. And this is where people get into trouble. And they're like, oh, maybe I'm not smart. Well, you're brilliant because your first 30 days were spent with a checklist that brought you success. You just threw away the one thing that was bringing you success. And it was the same way with managers. And they would start making mistakes and losing money and pissing off employees. And I had to reel them back in. I said, let's focus on what was working. Let's focus on what got you to where you were feeling so damn smart. And now let's just build off of it. And guys, that's your experience versus time. It's going to take a little bit of time. You'll know within the first week that the software works. You'll know within the first week that the education, I think, is better than any education out there. You'll know by the end of your demo that the only thing that really has to be kicked into gear to make everything work out for you is you. Do the work. Participate. Story of your life, Sergio. Yeah. But the cool thing is it starts to come together. And it starts to feel effortless. And it starts to create this opportunity for you where you find advantages outside of high probability, where you find entries that aren't your typical high probability entries, where you start using momentum, when you start to clear the path, and everything just kind of comes together. And guys, that's the magic of what we do. It's just like anything. It just takes a little time, a little bit of effort. So that was my preachy soapbox. I want you guys posting more tomorrow. Cavis, great trade, brother. I want you guys posting more tomorrow. Give me stuff to talk about. If you do market replay tonight, bring me some pictures, annotate some charts. If you're sitting around, you're like, man, I wanted to ask in class about termination conditions, but I don't want to be that guy. I don't want to be that girl. Guys, be that guy. Be that girl. Because when I start rambling, my throat gets dry and the dog stares at me and my shoulders tense up. So keep me busy. If you're on day one, Sab, I think you're still in here. If you're on day one, know that it gets easier every day. Keep it simple. Embrace the idea that the only thing you need to walk away from on day one is that if it's green, it's going up, and if it's red, it's going down. And if you pull that off on day one, you have already mastered 25% of it. And if you're an overachiever and you can identify space between the small and large in the direction of the trend as strong triggers, giving you an advantage, well, guys, you're halfway through it. The easy half, right? That's up to you, Sabu. Yeah. Cav, Joel's doing the... when you come into it and you always assume you know nothing. Joel's one of the best chart readers in this room. He's just human like the rest of us. So, Sabu, honestly, I've had people within their first 30 days, strict adherence to the KISS plan, fund those prop firm trading accounts like Apex, where you have to pass a test and then they'll fund you. And I've seen people find that level of success in the first 30 days. I've also seen people spend 5 years fighting it. 5 years. And they can't seem to figure out how to follow their rules. And I can tell you right now that the more rules you give yourself, the longer it's going to take. The more trades you try to catch, the longer it's going to take. The more you stray away from advantages, the longer it's going to take. So how long it takes is up to you. You can start simulating, which is exactly like real-time trading on day one. You can start taking sim trades today. You can start practicing those today. And I'm going to tell you right now, if you get really good on simulator, right? If you get really solid on simulator and you're like, man, I'm winning more than I'm losing and everything is good and I'm making money on simulator, that's when you go to, and let me bring it up, that's when you go to one of these prop firms. And this is where you're going to test your ability to follow rules with a little bit of pressure, guys. So if you go to something like Apex is going to give you the opportunity to take a test, to test your trading plan, to make sure that you really can win more than you lose without blowing out an account, right? And if you do it, and I've had people fund these $50,000 accounts in their first 30 days, well, then they'll let you trade their money, guys, and they'll let you keep 90% of your winnings. And I think you keep the first 25 grand. And right now they've got 80% off. So you can control $50,000 with Apex for about 35 bucks. And what's going to happen is you're going to realize that the second the threat of real money is put in front of you, you're going to have to get an iron and steam the pleats out of your chair. Because maybe you don't trust your rules. Maybe you're not as great a trader as you thought you were. And it's okay, guys. The average user blows out no less than 15 or 20 of these accounts. Because you do so great on simulator, right? You're so focused. Hey, take care, Cav. Thank you for being here, man. And then once the pressure of live goes on, a lot of people will deviate from the plan, right? They'll break away from what brought them success, what got them funded. And then you find the balance going between the two, guys. Everybody's going to break rules. It's okay. Everybody's going to make mistakes. It's okay. Just keep working. Keep working. Keep moving forward. Because this will change your life. This can change your life. And all it takes to change your life is $500 a day, $250 per contract, guys. Keep it simple. Keep it focused. And all right, that was way too much soapboxing to start the year. So guys, do me a favor. Tomorrow, keep me busy. Awesome class. Thank you for being here. Remember, if you have software problems, get together with tech, guys. I'll do my best to help you in class. Focus on the rules. Go through, read a lot, watch some videos. And guys, I'm going to right now, you're very welcome, guys. Thank you for being here. Right now, I'm going to bring up today's class